You say it's my conversation. Trust me, the conversation's happening everywhere.
Okay. But it's a leverage conversation. Right. And that's exactly the last week of February, what was going on. It was, okay, how levered are we and how quickly can we de-lever? And that's the story. And the question now becomes, when is the market comfortable leveraging up again? And that's when you get the stabilization.
All right, gentlemen, I want to thank you for being here today.
Thank you.
Thank you.
Okay, coming up, a lot more on Squawk this morning. A number of big events canceled. We've talked about this due to the coronavirus outbreak, and it's having an impact on state and local government budgets. Scott Cohen's going to bring us the details. For example, Austin getting hammered. We're going to talk about it. But before we head to that break, let's get a check on the markets right now. Squawk Box with the Dow up over close to 1,100 points. Squawk Box returns right after this.
Things you can do with Schwab. You can earn more when you invest your cash. You can get a satisfaction guarantee. You can also wonder why our competitors don't offer that. Schwab, a modern approach to wealth management.
Guys, if you wake up feeling fat, bad back, heartburn, tired, then it's time to get healthy and lose weight with Nutrisystem for Men.
I'm healthier, I'm stronger.
Lose up to 13 pounds and 7 inches overall in your first month. Money back guaranteed. Order now and we'll rush you Nutrisystem for Men.
Not only did I lose 60 pounds, I don't snore.
Act now. Buy 1 month, get 1 free.
Go online or call 877-344-FIT5 right now. Buy 1 month, get 1 free.
Halftime Report, weekdays noon Eastern on CNBC.
This is a historic day of trading, which did include a break.
A precautionary measure that we put in place so that the market can slow down for a minute.
Dow transports on pace to close at their lowest level since December of 2008.
These prices, 40% of all oil being pulled out of the ground in the United States right now is losing money.
The Dow is within about a percentage point of bear market territory.
It is the worst point drop for the Dow ever, down 7.8%.
Watch or listen to CNBC live on the app.
Does hair loss run in your family?
Treat hair loss at home in just 6 minutes a day with a laser light therapy that's been clinically proven to treat hair loss and regrow thicker, healthier hair. It's called the Capillus Laser Cap.
Laser therapy is an FDA-cleared treatment for hair loss. What laser therapy does, it reboots that blood supply. It reestablishes blood flow, oxygenation. It's a very effective treatment for hair loss.
Using the cap is very simple. I sit pretty much right here, watch TV, and I have it on. It's completely comfortable. You forget you have it on.
I just put it on when I watch the TV, and I got my hair back.
I feel like it truly has changed the way I see myself.
If you notice it, do something about it. Don't wait, because the longer you wait, the worse it can get.
Save $200 on the Capillus Ultra during our March Mania sale. Call 855-622-0329 or go to capillus.com/mania.
Welcome back, everybody. The spread of the coronavirus is forcing the cancellation of events from coast to coast, and it's stressing state and local budgets that are already stretched thin. Scott Cohen is in Chicago. He has more on this front. Scott, good morning.
Good morning, Becky. Behind me, the giant McCormick Place Convention Center, which would normally be a beehive of activity these days, the days leading up to the International Houseware Show, which is one of the city's biggest conventions. Well, that's canceled. That's 56,000 people who won't be here. A cardiologist convention later in the month has canceled, a couple smaller conventions. In all, 92,000 people who will not be coming to Chicago for an economic hit to the city of about $184 million just in the month of March. At the Chicago City Treasurer's office on the first floor of City Hall, they actually run a small trading room where they manage the city's $8 billion in operating funds in this crazy market.
Talking about our current policy. We're talking about if we need to make any changes, what we need to do to make certain that we protect taxpayers' dollars and make certain that we're able to withstand what's going on in the market today.
Now, convention and tourism revenue is a small slice of the city's overall revenue. A bigger concern, the city's 4 pension funds are just 23% funded. The lower interest rates don't help them make up that gap, and it means that the treasurer's going to have to look to what contributions they have to make to keep those funds going. And while the municipal bond market has been a pretty friendly place for both investors and cities of late, consider this: the agency that runs this convention center, which is separate from the city, just warned investors that if these cancellations continue, it could be an issue. Guys?
Scott, one question. The city's 4 pensions are 23% funded based on what numbers? That before the losses we've seen the last few weeks?
That's before all of this scare. That they are, it's like a $28 billion or something shortfall. There is the legislature has mandated that by something like 2050, they're supposed to have these pension funds funded or substantially funded. No one's quite sure how they're going to get to that. And when you have this low interest rate environment and you have this pinch to just the tax revenues, it just creates all sorts of issues for that. It's really just a massive issue in Chicago, in Illinois, and really across the country. Are you going to be doing a tour around the country with some of these things? I start thinking about other places where maybe it's bigger impact. Florida. It's certainly something that we're looking at, and we'll be looking at it as we start to ramp up to our top states for business coverage later this year. You look at the oil states, one of the things that we want to look at, Texas. Alaska has taken a big hit to their permanent fund, which is based on their oil wealth in the state. New Mexico, North Dakota, when you have the situation going on with oil prices on top of the coronavirus, a lot of states and a lot of cities are going to be looking at this. So while so much of the crisis with COVID-19 is sort of fears of what's going to happen, there's some real economic impact going on as shows cancel, South by Southwest cancels in Texas. It's really something that all of these local and state governments are going to have to look at.
Scott, thank you. Look forward to seeing more.
Okay.
Coming up when we return, Ariel Investments Chairman and co-CEO John Rogers, he oversees more than $13 billion in assets. We're going to get his thoughts on these big market swings. And then later, coronavirus cases growing across America. We're going to get the latest numbers and discuss the impact on our economy. We return in just a moment.
When it's time to sell your home, there's a lot of money on the line. How can you trust your real estate agent will get it right? There's good news. With HomeLight, you can compare actual performance data on thousands of agents near you, so you know who sells quickly, who sells for the best price. We'll match you with the perfect agent for your needs. And best of all, it's free. Sell your home for more money. Go to HomeLight.com today.
When the weather turns colder, you want to be cozy, but you wake up sweaty because cotton bedding and sleepwear trap heat and moisture. That's not cozy or comfortable. So we invented a one-of-a-kind, all-new performance sleep system that includes our sheets, mattress pad, comforter, and sleepwear.
With my Chics sleep system, I keep the ideal sleep temperature throughout the entire night.
In this demonstration, steam represents your body heat. You can clearly see Chics breathe 10 times better than cotton, moves heat away from your body, and wicks moisture. Cotton will never do that. We guarantee Chics will be the best life-changing sleep experience you've ever had.
Call or go to trycheeks.com now to sleep better every night. For a limited time, you'll get 25% off when you use the promo code on your screen, plus 2 additional pillowcases at no cost. That's a total savings of up to $100. And right now, you can enjoy special additional savings on the entire Chics sleep system. Call or go online now and see how Chics delivers the ultimate deep sleep experience.
Apps are used everywhere except work. Why is that? Is it because people love filling out forms? Maybe they like checking with their supervisor to see how much vacation time they have. Or sending corporate their expense reports? I'll let you in on a little secret. They don't. By empowering employees to manage their own tasks, Paycom frees you to focus on the business of business. To learn more, visit paycom.com.
An unparalleled challenge designed to test the world's best. Only one can win the PGA Tour's gold standard. The Players' Championship, Thursday at 7:30 a.m. on PGA Tour Live and 1 p.m. on Golf.
Welcome back, everybody. Italy has expanded travel restrictions to the entire country at this point in an effort to try and control the spread of coronavirus. Let's go live to Rome. NBC's Claudio Lavenga is standing by and joins us right now. And Claudio, what can you tell us about the difference between today and yesterday?
Well, there's a massive difference, of course, because last night and until last night, the only section of Italy that had these massive restrictions of movement restrictions was the north, while last night the Prime Minister, during a dramatic press conference, said that those restrictions will be applied to the whole of the country, including, of course, Rome. What does that mean? Well, the Prime Minister is telling all Italians, all 60 million of them, not to get out of their houses unless they have a real emergency, either for work or a medical emergency. And they even have to prove that in case somebody stops them if they are moving around, even in their own city, by having a self-certification form that says who they are, where they're coming from, where they're going, and why. The fine, if you break the rules, is $250 or even 3 months in prison. But that during that press conference, the Prime Minister said that these are desperate times, that the future of the country depends on Italians and their sense of responsibility. And at least until now, it looks like that they did listen, because I'm standing here at the Colosseum, usually one of the most crowded places, not only in Rome, but the whole of Italy, and it is fairly quiet, fairly empty. Mostly tourists are here, so you can see it with your own eyes. There is a big difference. The Italians are trying put this, they are staying put. They are staying at home unless it's really necessary for them to get out.
Claudia, thank you very much. It's good to see you.
Okay, meantime, back home here, we've got some news. Billionaire investor Steve Cohen's firm has now found itself at the center of the coronavirus outbreak. An employee at Cohen's Point72 Asset Management in New York City, not Greenwich, but New York City, has tested positive for the virus. Earlier reports suggested the employee has been self-quarantined since early last week and has not come into the office since. Point72 spokesperson telling CNBC the company is taking precautions and preventative measures to protect its employees. They add the company has extensive continuity plans in place to make sure it can continue to operate. But we're hearing lots of different stories throughout Wall Street, actually, in this vein.
The U.S. equity futures this morning, we've been watching closely. And again, after yesterday's biggest decline since 2008 for the markets, with the Dow down by more than 2,000 points yesterday, you are seeing a bounce back today for about half of those losses at this point. Dow futures indicated up by 980 points. S&P futures indicated up by 111 points. NASDAQ indicated up as well. These are all gains of better than 4% at this point. We did see the S&P futures at limit up. That's a gain of 5%. Yesterday it was limit down. You saw what happened at the open after that. Big part of the story is what's happened with the Treasury market. The 10-year right now back up to a yield of 0.688%, which big move after we got down below 0.4% for the 10-year yesterday. We'll talk about European equities and what we're seeing there. Green arrows across the board. Gains are a little more muted than what we're seeing here in the futures. FTSE is the biggest gainer. It's up by 3.7% in Italy with the crackdown, everything we talked about. Up by 2.25% after some very steep losses there yesterday. Squawk Box will be right back.
Pain can weigh you down, but you're resilient, and I see how it fuels your resilience with powerful relief. I see the dull, hot to relax. Pain will not get the best of you. It will bring out the best in you. Being a young athlete shouldn't lead to becoming dependent on painkillers. For every icy hot soul, $1 goes to helping young athletes rise up and properly manage pain.
made for the real world.
I'm a third-generation candy maker.
It's so sustainable, and I don't have to deprive myself.
I taste candy every day for a living, and if I can lose weight on Noom, so can you. Visit Noom.com and change your life for good.
In a changing environment, consistency keeps us on track. Columbia Threadneedle Investments.
At today's Best Western, stay 2 nights and get a free night for your next stay. 1 night, 2 nights, free night. Book now at bestwestern.com.
Watch CNBC TV live.
Welcome to Squawk Box here on CNBC.
On the CNBC app.
We do have some breaking news that we'd like to tell you about right now.
On the go.
It is time!
Live TV on the CNBC app. Download the CNBC app today.
These folks, they don't have time to go to the post office. They have businesses to grow, customers to care for, lives to get home to. They use Stamps.com. Print discounted postage for any letter, any package, anytime, right from your computer. All the amazing services of the post office, only cheaper. Get our special TV offer, a 4-week trial plus postage and a digital scale. Go to Stamps.com/try and never go to the post office again.
Selling a home is expensive and stressful, so we set out to create a better home selling experience with a network of the most successful real estate agents in America that'll sell your home for as little as a 2% commission.
The icing on the cake with the Ideal Agent was that we saved $12,000 in commission.
They were so stress-free. The whole process was amazing, and I would definitely recommend them.
We are not a discount brokerage. These are top local agents that'll get you the best results.
Markets are bouncing back this morning after yesterday's big losses. Mike Santoli joins us now with more. Hey, Mike.
Yeah, pretty strong bounce. Joe, let's take a look, though, in context over the last 2 years, the S&P 500, and put this bounce in a little bit of perspective. So if we open up, let's say around that 5% number, it's going to be around 2880. So that bounce would take you right up here. I think a lot of people are wondering if we can have some version of a V. This market, it's the fastest move down 18 or 19% we've ever seen. And arguably, we had another very quick repricing there in December. Take a look at the washed out levels that we reached yesterday. We really went to further extremes if we're looking at the amount of breadth to the downside. And this is the number of put options bought as opposed to call options. So when this number spikes, as you know, people are very, very worried about the downside risk, and they're buying a lot of downside protection or speculating on further declines. So we got this number yesterday right up there, close to 2-to-1 ratio. The last time we were anywhere near here was right around that low in December of 2018. And actually, you can see these numbers exceed what we've gotten in the last half decade. So it seems as if at least you can say that we got to extreme oversold levels and obviously primed for some kind of a bounce. The question is, do we pick it up from here and have more of a kind of a handoff to a little more of a bullish tone, or is it just going to be a bounce that is suspect on the first time? It seems as if, the jumpiness of the market is here for the moment. We'll see if yesterday was climactic, though.
Okay. Mike Santoli, thank you for that. We're going to continue this conversation right now. We are joined by Ariel Investments Chairman and Co-CEO John Rogers, who oversees more than $13 billion in assets under management. Our guest host all morning has been Joe Turnova. He's also hanging out with us. You just heard what Mike had to say. Do you think a bottom is in place?
Well, you never know. This is unprecedented, crazy, crazy times. But it does feel like there's been some type of capitulation. There's so much volatility, so much fear. It makes you feel like you're getting toward a bottom.
And what have you been doing about it over these past couple of days, and what do you plan to do about it today?
Well, we've been talking to all of our management teams on the phones, with CEOs, trying to get as many company visits as possible. And we want to take advantage of the volatility.
So have you been buying? Have you been legging in the entire past week and a half?
We have been. I wish we could say we just started yesterday, but we've been doing it for several weeks now. As the market gets cheaper and cheaper, we're finding more and more unprecedented bargains.
And what do you think? I mean, we've been talking about it all morning. What do you think is baked into the market in terms of where we are right now, in terms of what may or may not happen going forward with the virus, that is?
I think as this weekend unfolded and we got into this week, I think people really are seeing all the bad news. I think it's pretty well incorporated. People are all extrapolating this and seeing it getting to be like Italy. People are talking about cutting, all the things that could go wrong here. talking
And you
about.
think that's all in? That's all in?
I think it's all in. I really, really do. And there's some great, great opportunities out there.
John,
It's interesting because you disagree with Andrew. That's
you say that you see bargains.
Amazing.
Where are the areas that you think, sectors or individual stocks that you think are really oversold at this level?
We have two sectors that we've been sort of focused in on these days. One's the financial services. Our largest position is KKR. We think that private equity is an extraordinary place to be. More and more people, more and more investment committees are allocating money to private equity. They have lots of pools of cash, and they're in a position to take advantage of these bargains because there's so much cash in the private equity world.
That's been kind of waiting because prices have been so high. So this is a time to deploy.
Exactly. I think this is kind of something that's going to be very helpful for them. I also strongly believe that Northern Trust, the old gray lady of Chicago, it's a real anchor institution. It's selling at 10 times earnings. Kind of unprecedented cheapness for the kind of brand and strength that Northern Trust represents.
Well, private equity has almost become like hedge funds of 10 to 15 years ago. And I think there's some excitement if you're going to reprice them at a lower level. But John, let me ask you about the strategy of passive investing and the environment we're in now. Do you think that passive investing strategy is kind of contributing to an acceleration in the volatility and the leverage liquidation that we're seeing? And do you see a return to more active management strategies?
Well, I do believe that the passive management phenomenon is exacerbating what's happened in the markets. And the ETF markets have become so prominent, and the volatility just increases with the kind of regular trading that happens within the passive area. We do believe strongly that active management will be making a comeback. Us old dinosaurs will have our day in the sun. And there's real opportunities when the markets are trading for reasons that are not fundamental. Their stocks are trading because they're part of an index. If they're getting thrown away at bargain prices, it gives you an opportunity to be selective and find some great businesses that the indexes are getting rid of.
So I'm gonna go back. I'm gonna argue your side for a second because we're gonna have Alarian on later today, and he said 20 to 30% was definitely possible. There are other people that, given the move that we've seen in recent years, from 16, 17, 18,000 all the way up to 30,000. Some of them for a while have been saying this thing needs a 40% correction to get back to where long term you get down to a single digit multiple on some of these stocks. That's what we've seen in 74 and some of these bear markets. I just wonder if with professionals like you, John, whether there is a complacency that we assume 20% is going to be it, and it could be 30 or 35%, given that this is so different than anything we faced before. How was that, Andrew?
Now you're
I'm just saying.
The issue I've been raising all day and for the past couple of weeks is this idea that you could have a 10% correction on where the market was before.
Here's what I think.
And then you add in the corona.
No, but I think the reason you get a 20% sharp sell is because the worst case scenario, in people's traders' minds, they've already got that. But then again, technically, I think that we haven't had a true washout.
Look, I don't think, you tell me, I don't think a lockdown of London, New York, LA, and Chicago, and Atlanta, and I don't think that's baked into the cards.
That is not.
No. But I think there's so many cheap sectors and cheap stocks.
See, now he sounds again like a complacent professional money manager. That scares me.
The media industry right now, CBS Viacom, it's selling at 3 times earnings. They're going to sell $3 billion worth of assets. They've got such extraordinary content. It doesn't make sense at 3 to 4 times earnings. Meredith, local television broadcaster and owner of People magazine, it's not only 3 and 4 times earnings, but it's got a 10% yield in an environment where we have less than 1% on our treasury bills. So I just think this is these stocks are really already baked in a lot of bad news.
So, John, let me ask it this way. December of 18, 6 months basically to recover, 87, 2 years to recover, 08, 5 years to recover. What type of recovery time period do you think we're challenged by?
I think it's more of a 6-month period. As you know, Ariel is 37 years old. We've been to this movie before. We were there in 87 buying bargains during that crisis. We were there in 2008, early 2009, buying bargains. That's why we've been actually number 1 in our category since the March of 2009. So we think this is the opportunity to buy, and we think that, it can last 6 months. You never know exactly how long. But as we always remember, last century started at 66, ended at over 11,000. Warren Buffett always talks about that. And remember, last century, we had the Spanish flu. We had pandemics. We had 2 world wars, Great Depression, and the markets bounced back.
John, did you have a lot of cash you'd kind of been hoarding up to this point? What money are you putting to work?
Well, we've done both. Some of our products have more cash than others. Our small cap product, we had a significant amount of cash, and so we've been able to put that right to work.
What is that, 10% or something? What's the
Or
significant?
6 to 7% roughly. But then also we've been fortunate. There's been some takeovers here. We own a lot of Tegna. So now we've been able to scale out of that a little bit as the stocks have risen recently because of the takeover. We think there'll be more media consolidation happening, and that helps you generate cash for new bargains. And then, of course, you sell your most expensive stocks to buy these really, really cheap ones.
What else are you selling?
Oh, well, we're not going to talk about specific sales.
Let me push you on a different issue, which is last time you were here, you were a Bloomberg man. There was a report out yesterday that you have swung behind Biden, which maybe is not unexpected, but is that right?
Well, yes. As you know, I was a true believer in what President Obama believed in and thought that he had put together an extraordinary team. So Vice President Biden was a part of that team, and so I'm supportive. And feel bad that Mike Bloomberg couldn't make it to the finish line. But we really think it's time for change.
John, you had that wacky prediction that Pence was going to be president. I know you remember that. You said that Trump's hiding so much that there's got to be something there. So by 2020, Pence will be president. But that made you worry that he'd be a much more viable candidate than if the president were trying to get reelected. So now you must be happy since it looks like it's going to be Trump. So he'll be easier. You said he'd be much easier to beat than Pence.
I still believe that's the case.
Okay. But what was the whole Pence thing? That you just took a shot that something that might be right?
Well, we were saying we have to prepare for all eventualities.
No, you said that's going to happen, and we got ideas.
Let me ask you a different question. Yeah. How much do you think that this whole episode, both between the markets and what's happening with coronavirus more broadly, is going to have a demonstrable impact on come November?
I think,
given that you think a bottom is in, it sounds like, and that this may or may not be behind us, but is looking more rearview mirror-ish than a forward mirror, does it actually impact the election?
Well, as I said, 6 months is kind of my time frame. So as we get toward November, I think this will be kind of ancient history. We'll be on to some other issues in our country at that point.
So you don't think that Biden will be able to take advantage of this to the extent that he's going to be able to argue that somehow this was mismanaged one way or the other?
Well, it'll be a part of a mosaic of many things that have been mismanaged and so many things that have, so many people that have come and gone in so many different leadership roles. He'll be able to create a narrative there. But I think this virus challenge will be done by November.
John, the president had a story to tell about the stock market and about, even on Friday, we got the latest example of the economy with that great jobs number and unemployment at 3.5% and wage gain. Until this came along, it knocked the stock market down, almost 20%. We'll see what happens with the job numbers, but the mosaic you're talking about got a lot better for your side in the last month. There's no denying that, right? That's why maybe you should.
The polling numbers are very good.
Hearing you say a bottoms and made me rethink everything with Andrew. That scares me when I think too many people think a bottom is in.
Anytime I'm supposedly consensus, so you got to go to the opposite. That's
yes,
Seinfeld, the opposite day.
He did.
Thank you for being here. We have some news that's just breaking. I want to mention to our viewers right now, American Airlines just out with an additional announcement of capacity reductions. The airline saying it will reduce international capacity by another 10% for the summer season. This includes a 55% reduction in trans-Pacific routes. Will also reduce domestic capacity by 7.5% for the month of April. All of this due to falling consumer.
That's got to be spring breaks getting canceled left and right.
10 sounds like nothing. 55. That's a number, isn't it? For Trans-Pacific.
That's a huge number. So people are going to. This goes back to how far out you think, and the containment issue. How far out you think this?
Well, if you want to read into anything in terms of what this means for the actual economy and just the pullback, that April number, a decline of 7.5% in terms of what they're going to be scheduling, the April capacity, that just tells you that they are seeing the cancellations right now.
The other question, though, is
that they know.
Can you make an announcement like this? And I think you can. And 2 months later, to the extent that demand comes back online, you should be able to flip the switch relatively quickly.
Did Americans say anything about their carbon footprint, getting to carbon neutral? Not there today. Not in there today. Oh, okay. Maybe next time. All right. We have to worry about the real important things later.
They do say about taking care of customers. They will as the situation develops, recently announced the change fees will be waived for customers who purchase tickets prior to March 1st.
Prior to March 1st.
For travel through April 30th. If you book in advance, you're still hosed at this point.
Yeah. Should be a great opportunity for Warren Buffett, right? Buy more of the airlines.
You think the government, by the way, you think the government's going to come in to help them? You think they're going to need to?
It's going to be to have movie stars.
No. By the way, post 9/11, if you remember, $15 billion went towards the airlines. And
but that was for security measures for them to change the way they operated, not for them to not to pay them for flights they weren't running.
Some of those airlines rushed to Washington to say that they were in such dire straits.
At that point, but at that point, it was really
in the market today that
there were many more come in and buy it. But there were many more security issues surrounded with that.
We need an airline industry. It could be like the auto industry.
This is what I'm saying, and then you're going to get into a question of what you want, what kind of pound of flesh you want for that.
When we come back, we're going to talk about oil prices, which also have a very direct impact on what we've seen with these transportation markets. This morning, bouncing back after its biggest one-day rout in 30 years. WTI up by almost 10% this morning, 34.22. We'll discuss that after Squawk Box. John, good to see you. Thanks for coming in.
Thank you back.
Dana-Farber Cancer Institute
discovered the PD-L1 pathway.
PD-L1.
They change how the world fights cancer.
Blocking the PD-L1 protein
lets the immune system attack cancer.
PD-L1 transformed.
Revolutionize
immunotherapy.
PD-L1 saved my life. Saved my life.
Saved my life.
What we do here at Dana-Farber changes lives.
Everywhere.
Everywhere. Everywhere.
Everywhere.
Everywhere.
A hard 20 after a hard day isn't for everyone.
Got this, Peloton.
Waking up before the sun isn't for everyone.
You're almost there. Stay with me.
This isn't for everyone.
Peloton, let's go.
But at $58 a month,
Don't give up. Come on.
Peloton is for anyone who wants it.
Guys, if you wake up feeling fat, bad back, heartburn, tired, then it's time to get healthy and lose weight with Nutrisystem for Men.
I'm healthier, I'm stronger.
Lose up to 13 pounds and 7 inches overall in your first month. Money back guaranteed. Order now and we'll rush you Nutrisystem for Men.
Not only did I lose 60 pounds, I don't snore.
Act now. Buy 1 month, get 1 free.
Go online or call 877-344-FIT5 right now. Buy 1 month, get 1 free.
You should be mad that this is your daily commute. You should be mad at people who forget they're in public. And you should be mad at simple things that are unnecessarily complicated. But you're not mad, because you're trading with E-Trade, which isn't complicated. Their app makes trading quick and simple, so you can strike when the time is right. Don't get mad. Get E-Trade and start trading today.
Right before this happened, I quit a full-time job.
And I cashed out my 401k.
I put this together on my own.
I'm the person who made it.
Shark Tank, tonight starting at 8 Eastern. CNBC, get yours.
Crude oil plunging 24% yesterday in a single day. It was the worst single day since the Gulf War started, coming in the wake of Saudi Arabia's split with Russia. Joining us right now, fresh off a trip to Riyadh, is Halima Kraft, RBC's head of global commodity strategy and Middle East and North Africa research. And Halima, the market's rebounding a bit today, but what's happening with this rift between Russia and Saudi Arabia, and should we anticipate that there would be any coming together anytime soon?
I mean, the Saudis have made it abundantly clear that unless Russia returns to the OPEC bargaining table, they are going to take production up to potentially new highs. They were out today indicating that they would take production to basically 12.3 million barrels a day. That would be a record high for Saudi Arabia. So this is a situation right now where it's really, I think, in Russia's court to see whether they will come back to the table. There were reports on the CNBC website today that the Russian oil minister will be meeting with the country's corporate leaders to see if the Russians can put something on the table. But that's where we stand right now. I think it's really a question of what will Russia do.
If Saudi Arabia goes ahead with this and Russia does not come up with some sort of a deal that they can put things back together, was yesterday's sell-off overdone?
Well, I think if the Saudis are intent on really ramping up production, I think we will be in a situation where oil potentially could fall to the 20s. I mean, there are individuals in Russia, most notably the head of the Russian oil company, Rosneft, who signaled that he would want to take its production up further as well. So we could be in a situation where Saudi ramps up production and the Russians raise production. So in that type of situation, when there is so much concern about demand, I mean, this would be a really negative impact on oil prices. Again, I think we'd be talking about oil in the 20s in such a scenario.
So yesterday was not an over sell-off. If that's the case, is today an over bounce back where you're already looking at oil up by better than 10%?
I think right now people are hoping that cooler heads will prevail. I think, though, if we do get clear signals that the Saudi statements are going to be matched by barrels, then I think the market will really start to be very concerned about having an oversupply situation while demand is this fragile. We have not had a situation before when we've been in a demand crash where the producers have put millions of additional barrels on the market. This would be an almost unprecedented situation.
How long could Saudi Arabia and Russia each carry out that strategy?
Well, this is a question about, how deep are their reserves? I mean, both countries particularly Saudi Arabia, saw their reserves fall after 2014. They will be under economic stress carrying this policy forward. Russians say they have more bandwidth to do so. They say they're not as dependent on oil as Saudi Arabia. They say they need a lower oil price to balance their budget. But this will be a test of both countries' economic strength. I do think, again, I think the Saudis are looking to try to get the Russians back to the table. This is not a 2014 situation. They are not looking to flood the market almost indefinitely to break shale. They're trying to get back to the table. But the Russians, on the other hand, there are signals, again, if you look at that CEO of Rosneft, Igor Sechin, that he is looking to take out U.S. shale production. He wants the U.S. shale producers to balance this market. So if we get into that type of situation where the Russians are essentially saying, we're going to target shale, we want shale to roll over first, this could be an extended downturn in 2020.
Halima, just a couple of hours ago, Saudi Aramco said that it's going to be increasing its oil output to 12.3 million barrels a day starting in April. Is that just a negotiating tactic?
I mean, when I was in the kingdom, I was really struck by they're grimly determined to see this through. There's no joy about this policy, but they indicated that they will be ramping up production potentially to their maximum levels. Again, we've never seen Saudi Arabia produce at these levels. The recent high was in 2018 when they produced just over 11 million barrels a day. If they did 12.3, that would be unprecedented in terms of Saudi production. And it would leave us with almost no spare capacity in terms of producer states. Saudi Arabia is the central banker of oil. Almost every country produces their maximum levels. Saudi Arabia is really the country that sits on the reserves in the market. So if Saudi Arabia were to push their production to that level, we'd be out of reserve.
Halima, thank you. Good talking to you.
Thank you.
Okay, coming up when we return, the latest numbers on the coronavirus outbreak, and then later President Trump floating the idea of a payroll tax cut as the White House looks at ways to offset the economic impact of the virus. We're going to discuss the options on the table. Meantime, take a look at futures at this hour. We are in the green. Not as great as where we were before, but still pretty good. The Dow up close to 1,000 points. Squawk returns right after this.
Interactive Brokers charges 2.59% for a $100,000 margin loan. Do you know how much your broker charges? Upwards from 7.82% at Fidelity or Schwab to as high as 8.5 to 8.75% at Ameritrade or E-Trade. Move your account to Interactive Brokers and save at least $5,200 or much more if you're trading big bucks.
Day one, 50 Peloton rides to start the year. Here we go. Halfway there, just hit a 5-day streak.
We did not wake up to be mediocre today, Peloton.
It's just another meeting.
Come on, you didn't wake up to be mediocre.
The Barkins are empty nesters now. Should they downsize? Probably. Will they? Not as long as Thanksgiving is a holiday. Planning for the future is about more than just money. Let Equitable be your guide.
We see homes staying cooler without the planet getting warmer. At Emerson, when issues become inspiration, creating a better world isn't just a result, it's a responsibility. Emerson, consider it solved.
We can't calculate our total taxes?
Sales tax, real estate credits, solar incentives.
And we have no way to integrate all that.
No, but BDO does.
People who know BDO.
Hey, guy, ED issues? We got this. Today's your day. Go to forhims.com/ED.
This is a crate from KiwiCo. Each crate has an awesome science, art, or engineering project inside. Parents can order online and it ships right to your door. Learning has never been so fun or so convenient. Get your first month free at trykiwico.com.
Selling a home is expensive and stressful. So we set out to create a better home selling experience with a network of the most successful real estate agents in America
Take the next left, take a right, and you've arrived at your Vauxhall retailer, where you'll find the all-new Vauxhall Corsa. Test drive now and you can take advantage of a £500 deposit contribution with 4.9% APR representative. Book your test drive of the all-new Corsa now. Vauxhall. New rules Britannia. £500 allowance provided as deposit contribution on qualifying new Vauxhalls. Conditional sale and personal contract purchase only. Subject to status, T's and C's, 18 plus Vauxhall Finance. Registered by 2nd of April 2020. Search Vauxhall Test Drive.
Like yesterday, and I hope that people that join Northwestern Mutual have a plan, and you don't abort that plan during times like yesterday.
Within the plan and getting off trend, and I tried out the Ibbotson chart, folks, which is a famous chart back to the Depression and even before, of just a linear advance of the stock market quarter after year after year. How do you counsel people to view quarters and years versus the last 12 hours?
Well, I think that's the difficulty, especially in today's news cycle, and I think the market today is much more reactive than it used to be. And so, when I grew up in this industry, I was taught that, the market was a leading indicator and had some signal and some value, because it really, if you think about it, back in the day, it contains everyone's collective intermediate term outlook. And so to me, it did have some signal. Unfortunately, I think in today's world, it doesn't. I think it contains everyone's next 10-minute forecast. I think the world is so much more reactive. And you think about things like risk on, risk off, where everything moves inclusively. I think that the way people try to win in today's world is to outreact each other.
Well, Brent, don't you think at the moment, though, we face some serious near-term risks? When crude gaps lower at 20, 30%, and we start to think about whether some of these big energy names can make coupon payments, that's a serious near-term risk, isn't it?
Oh, absolutely, without a doubt, and there's always risk within the market. I mean, I guess the way I look at all this is I think back, and this is where, and I think you mentioned this in your opening, that, the market probably doesn't bottom until there's the daily new cases bottom. I mean, I think that's one thing that I kind of would think is a commonsensical type of thing. And there is a lot of questions. No one for sure knows who gets on your show and talks about what's going to happen and what their forecast is. There's assumptions baked into there. But I do think there's a couple things you can look at. One, the economy was re-strengthening prior to this. And so much like a virus, if you're healthier when you get it, I think you can fend it off. Remember the jobs report we had last Friday? I know it's hard to remember, but that was pretty strong. Two, the underlying fundamentals, the consumer, the banks have rebuilt their balance sheets. And number three, now you actually have stimulus coming in, I think it'll be fiscal stimulus, to help bridge the gap between what was before coronavirus and what will be after coronavirus. And so if I do a little bit of a mosaic, I do think that we're still in a fairly decent place, but there are growing risks without a doubt.
Brent, I'm looking right now. Bloomberg Economics is now predicting or looking at the indicators saying that the recession chances have actually gone above 50%, flashing an orange warning sign in their words. And I'm just wondering how the playbook changes for a longer term investor if you do have a scenario where we're about to go into a recession at a time when the Federal Reserve really doesn't have the tools to kind of pull it out in the same kind of way as we saw in 2008, 2009.
I'm not for sure it does change. And I guess the one thing I would say, and maybe kind of switching a little bit into investing strategy. So to me, I think the playbook is the same whether it's a recession or not. Now, I still think it's the latter, and we're not going to have a recession. But we've been having people hide out in defensives for much of the past 2 years, being concerned about recession because of first the trade war, the Federal Reserve fears, and now it's the coronavirus fears. I think those defensives are expensive, and I think you have to play for the re-strengthening, whether this is a mild recession or we don't have a recession. I do think the economy re-strengthens, and I think that means more cyclical asset classes. I think that's where the value is at, and that's where it fits your macro outlook. And so if you do have an intermediate term time outlook, I think you have to focus on valuations much more than you have to focus on trying to time a recession or not.
So, Brent, this is really important because you can get the macro call right and then the market call wrong, because there's a big debate right now. If we get this second half recovery, how do you play that recovery? Do you do it through, say, value, the banks, or do you get back to the growth story that's worked so well over the last couple of years? What do you favor then?
I've done this for 25 years, and I've seen trends change. They never stay the same, and so I would be more towards the latter. It's interesting. I heard a guest on your show earlier today talking about a recession and talking about potentially investing for the other side of that by getting more cyclical at some point. We agree, and we have different outlooks. And so I think, the thing is at some point you have to play for the re-strengthening. At some point you have to go where the value is. And I think that's one of the things that haven't worked for the past 2 years. And that's where I would be more focused on right now.
Brent, what's fascinating about this and the turn of events from February 12th, February 13th, down 29,000, Brent would have been on, Great. Well, things change, but the one call I'm not seeing right now is nothing's changed. So a virus ends, we know that by science, or there's a vaccine, whatever, and maybe Russia and Saudi Arabia get together and things like it, we clear these crises. Do you just presume out 6 months, out 6 years, a reversion back to the market structure that we've had recently?
That's the big question, the big fear, I suppose, that people wonder about is the future different than the past? And I'm not for sure that it's completely different. I still think the cycle ends the same way all other ones have, when the Fed eventually tightens too much. And I don't think they've done so yet. And so I don't know. I don't know if we can have a world in the future where almost all the world's bond market trades below the rate of inflation.
Yeah.
Is inflation gone forever? I don't know. I think we legislate it back in. I think that the actions that are happening right now from a fiscal policy, from monetary policy, those shifts and those wins eventually below inflation to being something in the future. Maybe that's where I'm different than most strategists. But I don't know that the playbook has completely changed from a longer term perspective, and I don't know if it's a complete reversion to the mean. But we've seen decades like this before.
Thank you. With us with Northwestern this morning. Really interesting ideas there.
Some reporting coming from CNBC. The White House is not ready to roll out specific economic proposals in its response to the widening impact of the coronavirus outbreak. This according to administration officials telling CNBC. The response in equity futures so far is not horrific. We're still positive by a little more than 3%, though we quite clearly roll over.
Come on, we're up 1,100 points. We're up 800 Dow points now. We're down 300 Dow points.
This is the difficulty.
Just to see how many times you're going to quote Dow
points.
When
I caught up with Larry Kudlow, the National Economic Council Director, last Friday, he mentioned that they were looking at a certain set of policies. It wasn't clear over the last few days how close they are to putting them together into a clear plan, never mind being able to deploy them. And it's interesting to me on a day like today.
What's this headline say again?
Look, many people expected some economic proposals today, and it's not clear, according to this reporting from CNBC, the White House is not ready to roll out specific economic proposals in its response to the widening impact of the coronavirus outbreak. That's going to be disappointing to a lot of people because for me, the longer you wait, the more you're going to have to do.
Yeah, although there's a question of just the recognition that there's an issue is enough for the market. I think that the silence from the administration, the sort of sense that everything was fine, was part of what was escalating the losses yesterday. Will it be enough to just say, we're on it? We are seeing those futures take like that.
I'm not going to allow the price action of the moment to shape this narrative. This is really important. They have been so slow, and the fact that it is going to take even longer to get this done is really, really important. Every day you lose, the more you're going to have to do.
Italy showed us that.
The more you're going to have to do. And Italy is coming out with some big initiatives.
Something to talk about, and folks, to be clear here, down 2,000, up 1,000 Dow points, and now up 800. So volatility still ensues. Right now with the news in New York City, here's John Tucker.
And Tom, in a dramatic move this morning to keep the coronavirus from shifting north, Austria's chancellor is closing part of that border. The country is barring travelers from Italy. Italy is Europe's worst hit nation and the first country to attempt a nationwide lockdown as cases topped 9,000 overnight. And at the center of the coronavirus outbreak, China reporting the lowest number of infections since January 18th. And President Xi Jinping visited Wuhan in a sign that country sees the outbreak as under control. That cruise ship, Grand Princess, is docked in the port of Oakland. More in this report from Bloomberg's Ed Baxter.
The disembarkation has begun. People have lined the gangway and stood in lines to get into the checkout tents. Vice President Mike Pence says there is other good news.
The 25 children on the ship are all healthy. Of the people that have contracted the coronavirus, 21 in all, they are being dealt with in proper isolation.
The vice president says there'll be no contact with the public during this process. The ship carried people from 54 countries. In San Francisco, I'm Ed Baxter, Bloomberg Daybreak.
And former Vice President Joe Biden looking to smash Bernie Sanders' hopes and cement his own frontrunner status just a week after resurrecting his White House bid with a delegate victory on Super Tuesday. He says he's taking nothing for granted in Michigan today.
I hope to do well, but, the polls have been wrong before.
Global news 24 hours a day, on air and on Quick Take by Bloomberg, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm John Tucker, and this is Bloomberg. Jonathan.
John Tucker, thank you, sir. Let's get back to that reporting, shall we? This coming from CNBC. The White House is not ready to roll out specific economic proposals in its response to the widening impact of the coronavirus outbreak. That's according to administration officials talking to CNBC. In the markets, no big moves here. Your price action, equity futures advanced 3 3.69% on the S&P. In the bond market, yields higher, treasuries lower from New York. This is Bloomberg Radio.
Message and data rates may apply. T&C and privacy terms can be found at babbel.com/terms. Please don't text and drive.
Have you wanted to speak a new language, but you thought it'd be too hard or take too much time? Then try Babbel for free by texting EXPLORE to 64,000. In just 15 minutes a day, you'll be on your way to speaking a new language in just a few weeks. And right now, you can try Babbel for free. Babbel starts out teaching you words and phrases by matching them with pictures. You won't believe how easy the interactive program is. Soon the sentences get a little bigger, and before you know it, you're having simulated conversations voiced by native speakers. And because Babbel is crafted by language experts and uses the spaced repetition method, in just 10 to 15 minutes a day, you'll be speaking the language of your choice with real confidence. With Babbel, you can speak a language. Just text EXPLORE to 64,000 and start your first lesson in the language of your choice for free. Download the Babbel app or text EXPLORE to 64,000 and try it for free. Text EXPLORE to 64,000.
Vatsal Shah is Senior Project Engineer at Mott MacDonald, a global engineering consultancy with more than 16,000 employees. He earned his PhD at New Jersey Institute of Technology and as an adjunct professor is helping NJIT students explore emerging technologies.
My focus is renewable markets, emerging technologies, the idea of floating cities. What are we doing to develop that? What will happen to the city on the water? Well, you're going to have waves hitting it. You're going to have solar. How are you going to develop plants? How are you going to develop vegetation and farming? That sort of thought process happens at NJIT. We actually plan out what will the city look like. How do we develop that? So in 10 years, we're actually ready to take on those challenges when we have our first development in the water. NJIT also has been doing a lot of work in self-healing materials, so taking the polymers and the new material that we have in our material sciences departments and putting them into things like concrete, things like steel, reinforcing our soil.
NJIT, New Jersey Institute of Technology. Learn more at njit.edu.
Mother's Day is coming up, so head to your local Asda in London. We've got chalkboard photo frames for just £4. Thoughtful gifts, unforgettable prices. Don't compromise. Asda. Save money, live better. Selected stores subject to availability. Offer ends 22nd of March.
This one shouldn't take long. Of course, if it had a cover, I might not be bothered. Can't see what's under there. And then they'd have chained the back wheel. It would have taken me much longer, especially if the chain's off the ground. Makes it harder to cut. This one doesn't even have a lock on the front. So, in the time I've been talking to you, I've nicked it.
On average, in London, a scooter or motorbike is stolen every hour. Make sure it's not yours. Lock your bike, chain the rear wheel, and cover to make it harder to steal. Lock, chain, cover. The Met Police.
We've all been in one, but how much do you really know about black cabs? For instance, did you know that a black cab has to be tall enough to accommodate an individual wearing a bowler hat? That's a lot of space for you and your briefcase. Or that Free Now drivers can use the bus lanes, the perfect getaway to make your meeting in time. And with 2-minute central London pickups, you needn't waste time searching for a taxi. Just download the Free Now app today and take the hassle out of getting round London.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and on Quick Take by Bloomberg. This is a Bloomberg Business Flash.
And I'm Karen Moscow. It is 8:17 on Wall Street, and futures are jumping this morning. We go to the First Word breaking news desk for today's morning call. Here's Bill Maloney. Bill, good morning.
And good morning, Karen. That's right. U.S. futures are surging today after yesterday's losses, with Dow futures up 788 points. S&P's gained 93, while Nasdaq futures climbed by 272. The U.S. 10-year yield at 0.65%. Gold is down 1%. Oil is rebounding, and Shanghai rose 1.8% overnight, while European markets are also trading higher, led by 3% gains in the UK. Back in the U.S. on the economic front, small business optimism was 104.5. That beat estimates. After the bell last night, Booking Holdings withdrew its guidance. And in deal news, Infineon and Cypress Semi won CFIUS clearance. In other news, Dick's Sporting EPS beat estimates. Shares are up 9.6% in the pre-market. And Delta withdrew its Q1 and 2020 guidance. Wrapping things up, PRE was raised to neutral at JP Morgan. AEP raised to overweight at Morgan Stanley. And Ryder and UPS both raised to buy over at Stifel. Live from the First Breaking News Desk, I'm Bill Maloney. Karen?
All right, Bill, thank you. To hear live breaking news over your Bloomberg, type squawk on your terminal, SQUAWK, and that's a Bloomberg Business Flash. Tom, John, and Lisa.
Karen, thanks so much. Again, futures up 94, Dow futures up 807. I want to make clear here, it's really nuanced right now, that we had recovery highs in the market, John, about 40 minutes ago, maybe an hour and 15 minutes ago, and we really ebbed off that both in bonds and in equities here. I don't want to say we've broken recovery support. We're not there yet, but nevertheless, it bears very close watching here with, again, futures up 97, Dow futures up 840.
We were limit up on the S&P 500. On S&P 500 futures, we're now up just 3.6%. In the bond market, Treasury still softer, yield still higher, up by 14 basis points now. So we lose just a little bit of that bid as the session grows older. The latest reporting coming from CNBC, the White House is far from ready to roll out specific economic proposals in its response to the widening impact of the coronavirus outbreak. And they go on to write, inside the administration, some officials were stunned by the president's claim that he would hold a press conference Tuesday to announce an economic plan, as the actual details remain up in the air.
What's interesting to me is you're still seeing futures positive and substantially so, even though we're not going to necessarily get details, and we're hearing reports of a lack of clarity around what those details will be or how much agreement there actually is on them, which really raises a question for me. What does the market need to rally? What are people buying into, and how long-lasting can it be if it comes with little promise of very near-term details?
I honestly wouldn't spend too much trying to create a narrative for the price action of the last 5 minutes. We're in a really, really volatile moment. And if you try and say what's happening on the screen right now, it'll change in 5 minutes. You'll have no reason for it.
In our shock, let's remind ourselves from 54, we're still at a VIX of 47.20. For those not keeping score, anything over 30 is really considered some turmoil. Why don't you bring in Sabah?
Incredibly volatile. I said it at the top of the program. Low information, low conviction, and nobody has a clue on how to model 2020. Someone who nailed this year, though, Subhadra Rajappa, Societe Generale's head of U.S. rate strategy. She joins us now. Subhadra, great to catch up with you. Treasury yields, wow through some aggressive targets that you started at the start of the year. Where are you now?
I think Lisa made a very good point, which is it's really hard to sort of look at this market from a fundamental perspective. Yes, we had a massive rally yesterday. We're giving up some of those gains today, but it's really hard to look at yields and say, and sort of affirmatively say where things should trade. What the bond market is now pricing in is for zero interest rate policy, and looking past that, the potential for quantitative easing or forward guidance or more extraordinary measures coming from the Federal Reserve. So any volatility in risky assets is translating to gains in the bond market.
So, the great call you've had, combined with the SocGen caution, calls for an important reassessment right now. Have you brought in your house call on disinflation and sluggish real GDP growth? Have you brought that in ever more so?
Again, the move in break-even seems like it's, again, a little bit too overdone, but it's really hard to know if we start seeing oil prices decline to new lows or below 30. You're talking about more of a financial stability risk. Break-evens below 100 is very troubling. I'm sure the Fed is paying very close attention to that. But broadly speaking, what the bond markets are reaffirming is our call for a recession this year. And now this is not just a U.S. recession. It's looking more like a global recession and a global decline in bond yields. So the policy prescription has to come from sort of coordinated action globally.
I'm looking at the moving average study, the break-evens, and Lisa, it's real simple. Yeah, break-evens have spiked down to indicate significant disinflation guesstimate. These are 10-year break-evens, but on a moving average study, the vector's been disinflation since 2013.
Yeah, and the implication here is that, yes, the Federal Reserve is going to drop to zero and it's not going to matter, that they're going to try to go as low as they can go, at least within modern history, and it's not going to work. I'm just wondering what that means for Treasury as an asset class going forward. JP Morgan's Bob Michael came on with us yesterday afternoon and said that, frankly, Treasuries will not act as a haven asset class going forward just because we've reached a certain lower bound for the time being. Do you agree?
I agree with that view, and I think that that's really the risk, right, is that you're starting to see a gradual Japanification of the U.S. curve. So, once you start getting closer and closer to the zero lower bound, it's going to be very, very hard for treasuries to actually act as that safe haven asset. It's, and that's ultimately the risk. And as you pointed out earlier, I think the fact that central banks easing even back to the zero lower bound is not going to do a lot for inflation expectations is also troubling. I mean, the trajectory for inflation globally, not just in the U.S. In the U.S., actually, CPI has held up pretty well even in the last couple of years, but it's the global inflation picture that's been dragging U.S. inflation expectations lower. And it's not clear that policy can do a whole lot to reverse that.
Subhadra, fantastic to catch up with you. Subhadra Rajappa, Societe Generale's head of US rate strategy, calling for much lower yields at the start of the year, and wow, did she turn out to be right. Look, guys, in the bond market right now, the ECB has a policy rate of negative 50 basis points on the depot rate. Yields in Germany are negative 77 basis points on a 10-year maturity. I take the argument that, yes, there will be limits to how much treasuries can rally, but if Fed funds goes to zero, I think you can also make the argument based on experience elsewhere in an environment in the global economy like the one we have now, that 10-year rates can go down towards the policy rate.
Although officials have come out from the Federal Reserve and said that they do not see necessarily negative rates as being beneficial.
Agreed, but if Fed funds goes to zero, which is what many people think they may well do, then I think the curve can shift down in that direction too.
Without a doubt, and I think that was the implication that we saw this week, and that was the big change and the game changer, frankly, that we saw in yesterday's price action.
Can you help our audience like me who's confused by this? The Fed can cut rates. They cut 50 beeps emergency. We have people saying 2 cuts, 3 cuts, 4 cuts, whatever. The ECB can cut how much right now?
Well, we're talking about the effective lower bound. In Switzerland, negative 75 basis points is where we are at the moment at the S&P. I imagine there's a little bit more downside on rates for the ECB if they want to go there. I'm not sure how many people will be happy with it.
We should go to Frankfurt for Thursday.
And we should go to Zurich and Tokyo and everywhere else.
Wuhan.
Not completing high school is more of a social thing than it was an academic thing. I came out in the 11th grade. Nobody was embracing you. The kids were cruel. It was very difficult to be gay. Even though all these years have passed, I still had that longing to have my diploma. The hard part was determining that I was going to do it, but I definitely didn't do it alone.
At age 30, with the help of her mentor, Carissa finished her high school diploma.
I have a mentor, Maria. She convinced me to continue my education and to finish what I started to get my diploma. Just never judges. She's a true role model. If you're even considering getting your high school diploma, go get it. You can do it.
No one gets a diploma alone. If you're thinking of finishing your high school diploma, you have help. Find free adult education classes near you at finishyourdiploma.org. That's finishyourdiploma.org. Brought to you by the Dollar General Literacy Foundation and the Ad Council.
Asset managers who seize change to launch new strategies, add distribution channels, or exploit new technology to re-engineer the investor experience are often rewarded. However, in an industry paralyzed with complexity, few act with agility or decisively. Few run their business strategically. Yet, the most competitive managers in the market know, with the right partner and a flexible operating platform, you can. Go boldly toward change with SEI Investment Manager Services.
I'm Steve Meyer, president of SEI's Investment Manager Services. At SEI, we understand the emerging forces that will define success for asset managers and what firms will need to compete tomorrow. That's why we continually optimize SEI's global operating platform. If your business requires greater agility, our advanced technology, integrated best-in-class systems, and multi-asset expertise can be your catalyst for business transformation.
With SEI Investment Manager Services, you lead the charge in a competitive marketplace. Learn more at SEIC.com/seize-change.
This is a Bloomberg Money Minute. Ahead of the opening bell on Wall Street, the futures point to a bounce higher at the...
Delayed at the dentist, and now you're late for school pickup. You need a free now. Need to take the dog to the vet before lunch. Should have gotten a free now. Trying to get 4 kids and their baggage to the airport. Free now. Sometimes you can't get from A to B fast enough. Download the Free Now app today for quick pickups and reliable drivers, no matter the situation. Less hassle, more hustle with Free Now.
Welcome to Costa, the nation's favourite coffee shop. What can I get you?
A flat white, please.
And would you like to...
Enter the 10 million point Costa Coffee Club giveaway.
Yeah.
And collect points towards free coffees and treats in store.
Thank you.
You're welcome.
Registered Coffee Club members only. 18 plus. GB only. Excludes Northern Ireland. Purchase required. 9th of March to 5th of April. The question, what is your favourite branded coffee shop, was asked. See costa.co.uk for full details and T's and C's.
Hey, have you heard? The Mayor of London has launched his latest van scrappage scheme to help tackle London's toxic air. Small businesses or sole traders like me with a polluting van could now get £7,000, which you could use to trade up to a Euro 6 vehicle. And you could get an extra £2,500 towards running costs if you go electric. The scheme is now even easier to qualify for, and it's open to any businesses with up to 50 employees, like mine. So, I'm going to search TfL Scrappage to see if I'm eligible and apply. You should do the same. To the Mayor of London and TfL, every journey matters.
At Asda, with our great range of beers and cider, it looks like you're hosting. Get 2 packs for just £18 or just £10 each. Like 12 bottles of Corona or 10 cans of Copperberg Cherry. Cracking brands, refreshing prices. Don't compromise. Asda. Save money. Live better. Selected stores subject to availability. Offer ends 18th of March. 330 millilitres each. Drink aware.
Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119 and around the globe. The Bloomberg Business app and BloombergRadio.com. This is Bloomberg Surveillance.
From New York City, this is Bloomberg Surveillance for our audience worldwide. We are live on Bloomberg Radio, where equity futures come in just a little bit. Still elevated, up 3 percentage points. We were much higher, limit up on the S&P 500. In your bond market on treasuries, yields are higher, just not as high as they were. We're up 13 basis points on a 30-year yield to 1.126%. And in foreign exchange, what a move we've seen in the last 24 hours or so. Yen stronger, aggressively so yesterday, now a whole lot weaker. The dollar in yesterday's session, down around about 1%. In today's session, up around about 1%.
Nicely said, but I would state, and Philip Hildebrand was really strong on this morning. It's what he led with out of BlackRock, their vice chairman, and of course, former head of the Swiss National Bank. It's all gyrating, but it's gyrating in control. I don't see any panic on my screen, and the panic yesterday really wasn't there. It was all very orderly. Even, the big drops and all that, it was orderly.
Yeah, there was a feeling of orderly action, although I will say there's a bigger takeaway here. For years, the Federal Reserve, the ECB, the BOJ could dampen volatility. They have come out, they're cutting rates, and in the past that has worked to dampen volatility. It is not working this time. And I think that is an important narrative shift at a time when the conversation shifts very much away from the monetary policy to the fiscal policy.
Well, acting as quickly and as aggressively as they did just undermined the position they were in, that they could produce any kind of confidence around them in investors, in markets whatsoever. We knew there was a really good argument out there that them cutting rates would do little to support this economy, yet they cut rates anyway and just reinforced that argument. I have no idea what that was about other than being held hostage by financial markets.
And Tom, to your point, talking about the break-evens and how low those rates have gotten, this just reinforcing the idea that the Federal Reserve is basically almost out of ammunition if you look at the Fed funds futures and what they're expecting in terms of rate cuts going forward. And yet, inflation, more abound.
And the core of this, folks, and this is, back into an historic 2020 where we're, edging up on the end of the first quarter. John, you've always got the rule the year starts March 31, where we regroup off all the things we were wrong about on December 31. And, we say
I'm not criticizing strategists. It's just always the way, right?
It's just the way.
We start the year and it's like, this will happen. It gets to the end of Q1.
This year's the mother of all resets. This year's a massive reset as well. Right now, Tom Purcelli with us with RBC Capital Markets, and he can really link into the disinflation question because he's really got a cottage industry going of one of those inflationary characteristics, which is wage growth, and we're thrilled he could join us right now. How have you adjusted the trend of disinflation, Tom Purcelli? What is the new vision you have for how our inflation will migrate? And we say this, folks, with the inflation call that we'll see tomorrow, rather. Tom?
Yeah, hi, good morning, everyone. So we haven't really made any material/wholesale adjustments at this point. I mean, we're still trying to come to grips with, what the impact is going to be from a growth perspective. And in that regard, there's very few analogs, right? I mean, I think a lot of people are trying to use 01, after 9/11, and I think that that's a sort of relatively useful framework in terms of, the impact on things like recreational spending, and et cetera. So I think that there are some useful nuggets that you can sort of extract from that period to sort of help guide you today. But again, I think what we have to keep in mind, there's a lot of differences too. I mean, we're in the throes of an actual recession, right? I mean, things actually started to slow down prior, whereas the exact opposite is happening here. I mean, people are so dismissive of recent data. I don't know why. I mean, I think it's a really useful snapshot of where we were prior to corona virus really impacting us. So just to draw that idea out, I mean, we know that labor backdrops were incredibly tight, right? We know that the sort of manufacturing space was starting to rebound to some extent. The service sector was in really good shape, right? It's useful to understand where we were so we can actually gauge what the impact is going to be on the back of this. And here's what we know. At this point, if you look at, so one of the things we've been doing, and I'm sure others have been doing something similar, we've been looking at vehicle traffic patterns or volumes of traffic. And the one thing that's obvious is that in Seattle, a city that's been relatively hard hit, volumes are down. I mean, they're down about 20%. So you're going to see some ding to a growth perspective. The bigger question is, how quickly do you bounce back? And that's where I think the snapshot of where we were prior is useful.
So, Tom, you've been critical of the Federal Reserve in the past. I may be underselling this just a little bit. More recently, I think even more critical.
Yes.
At the beck and call of financial markets, seemingly the most important variable right now for you, Tom?
Yeah, I mean, look, Jonathan, and I think you nailed it just before we came on. That's exactly what's happening. I mean, cutting rates right now is utterly useless. There's nothing that the Fed can do from a cutting rates perspective that's going to help the backdrop. This is not a low rates problem. I mean, the consumer couldn't be in any better shape, right? Rates were already low if a company actually wanted to engage in some sort of CapEx. So this has nothing to do with rates. I would be much more sympathetic if bigger, sort of outside of the box thinking ideas came out of Washington, D.C. instead of this ridiculous approach of, hey, let's just cut rates. I mean, let's be honest, if the Fed lopped off 100 basis points from funds right now, I wouldn't be surprised because I think that's where we are, right? I mean, from a Fed perspective, I'm much more sympathetic to the idea of, do a corporate tax moratorium. I mean, that's low cost. We only take in, $280 billion in corporate taxes. So do a moratorium for the rest of the year. What does it cost you, $100-odd billion? I mean, we throw around trillions of dollars in Washington, D.C. I mean, here's an impactful thing that actually doesn't cost you that much. Bridge loans. I mean, I think that's another idea that probably needs to be discussed, right? So I think there's countless other things that the Fed can do. And let me just make this one last point, because I think what we have to keep in mind is this critical idea. Right now, companies are worried about cash flow, right? I don't think that they're worrying about, I got to get my, operating expenses back in line. Let me start cutting headcount. I don't think that's where companies are. I think companies are actually more worried about the cash crunch associated with this. So help them in that cash crunch, and then maybe you mitigate some job losses. I mean, to me, that's a much, just think bigger, DC, right? I mean, this approach is just so silly and so disappointing.
Well, Tom, this raises a really important question, right? And where is the onus? Is it on the Federal Reserve or is it on Congress? Is it on the politicos in Washington, D.C.?
It's not on the Federal Reserve. There's nothing the Federal Reserve can do right now from a cutting rates perspective. That is useless. I think they can team up with the Treasury Department. I think that they can offer some sort of loan assistance. So again, anything that you could do to stem the tide of the cash crunch that I think a lot of companies are going to be dealing with. That's a much better approach.
Tom's absolutely nailing it this morning. We've been talking about this for weeks now. I think it's absolutely critical that we sit here and realize that this doesn't have to be an economic disaster. You can have as a base case that claims are going to rise, but they don't have to rise materially. You can do things to mitigate the things that SMEs are going to go through the next couple of months. My issue, Tom, and I've been really frustrated about it, the longer this administration waits to do these things, the more they're going to have to do.
Yes. Yes, I completely. I was saying yesterday, I was in one of our offsites just to see if that computer works there, and I was having this conversation with the handful of people that were at this offsite yesterday. Like, someone just needs to step to the microphone right now. Just do it today. I mean, say something material and meaningful.
But, Tom, this is important. Yep. Really, really important. Do we have politicians of both parties who can advocate specificity now versus broad generalizations and grand phrases?
I think that the answer to that is no, because I just don't. I think that's how Washington, D.C. works. But can someone do it? Yeah, someone can do that. You can easily step to the mic. Look, in the 3 minutes that we've been talking, we've already hatched a few good ideas, I think. Well, there you go.
Okay, hold on a second, Tom. But this is a really important point also, because if you have politicians who you don't think are going to do this or be able to sort of stave off some of the potential turmoil that we're seeing with some of these measures, then how confident are you about your constructive outlook for our ability to recover from this?
So our ability to recover from this is more of a function of we were in good shape before. We do not think that this thing lingers in such a profound way that, look, I mean, I don't want to make light of this. This is obviously it's dramatic what is happening to people. Coronavirus, unless this becomes something like the plague, I think that you can bounce back from this from a broad economic perspective. And that's the thing that we actually continue to hang our head on. I mean, we have data that show these countries that are actually, China is beginning to stabilize now. So if that is the analog that we are supposed to follow for what's going to happen here, then yeah, you can bounce back. But I think, again, the bigger question is, if you want to stem the tide of what's happening from a market perspective, I think someone in Washington needs to step to the microphone and actually make some. It doesn't have to be profound. Well, just say something more meaningful than, hey, we're working on this and this is what we're going to do. I mean, you can actually easy things that they can do.
With us, Tom Purcelli of RBC Capital Markets. Joining us now from Coventry, England, John Farrow joins us, of course, just speaking with Mr. Kudlow as well. Did you get any sense, John, in speaking to Mr. Kudlow the other day?
To be honest with you, I did. I think that he's looking at some of these more targeted measures. The problem is just getting the whole administration on side, including the president, to go out and do some of these things. That's the problem. The planning for me, and this has been my frustration for weeks now, the planning for this should have started immediately. As soon as we started seeing these Chinese cities shutting down at the back end of January, the planning should have started then so they could deploy the tools right now.
To remind our listeners and viewers worldwide, right now we had a headline, an hour ago from CNBC saying there's no plan for today, even though the president wants to get up and make a grand statement?
According to CNBC, there may not be any firm proposals made today, even though we're waiting for some firm proposals.
Well, Lisa, we've drifted back up 1,100 to up 678 as well right now.
Yeah, and there's also a question. We're not necessarily getting a firm guidance from Washington, D.C. on policy, but also with respect to the medical guidance, like don't leave your home or quarantining or whatever. And then you have Tom Keene saying put vapor rub on your eyelids, or viruses are viruses.
So we're using it home. We're using Vicks Vapor Rub.
Viruses end.
The Joe Coy School of Medicine as well.
Did we thank Tom Purcelli?
Tom Purcelli, thank you so much.
Thank you,
RBC Capital Markets fired up. Today, the 30-year bond pulls back from that 125 joy down to 112 right now. With the news in New York City, here's John Tucker.
And good morning, Tom, John, and Lisa. President Trump is pushing for stimulus to provide economic relief from the coronavirus.
We're going to be meeting with House Republicans, Mitch McConnell, everybody, and discussing a possible payroll tax cut or relief.
That was yesterday, but CNBC this morning, citing sources it doesn't name, says the White House isn't ready to roll out specific economic actions, that many details need to be worked out. On Monday, Health and Human Services Secretary Alex Azar said nobody is trying to minimize the spread of coronavirus. 6 minutes later, President Trump tweeted seasonal flu deaths in the U.S. had so far outpaced those who perished from coronavirus. Delta and American Airlines are following rivals with a plan to cut back on flying as they grapple with a rapid decline in travel demand. Delta said in a statement domestic capacity will be pared by as much as 15%, while international will tumble as much as 25%. American will lower U.S. flying 7.5% in April, with a 10% decline in foreign service. And Joe Biden could take a big step closer to sewing up the Democratic presidential nomination with 6 primaries that could open wide leads over rival Bernie Sanders in delegates and support, especially in the key state of Michigan. Biden, the former vice president, expected to sweep most of the 6 states that are voting today. And we have global news 24 hours a day, on air and a quick take by Bloomberg, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm John Tucker, and this is Bloomberg. Jonathan.
Hey, John, thank you.
This is important because the date is important to me, John Farrell. Ryanair suspends all Italian flights until April 8th. The thing to me is not that they're suspending flights. Their vision's out to April 8th. That really gets my attention.
Another month potentially, joining the likes of British Airways as well. In the equity market, we trimmed the gains. On the S&P 500, we were limit up. We're now up just 2.7%. In Europe, on the Stock 600, we cut the gains in half. We were up 4%, now up by around about 1.9%. From New York City this morning, Tom King, Jonathan Ferro, joined by Lisa Abramovitz. This is Bloomberg Radio. You are listening to Bloomberg Surveillance.
This is your Bloomberg Real Estate Report. I'm Denise Pellegrini. As coronavirus spreads, some home sellers are rethinking having their homes on the market.
Sell your house, you need to have strangers walk through it and touching things and opening the closets and lingering for a while. We discovered that there were at least a couple of cases where sellers might not be comfortable with that.
Oshrat Carmil is reporter for Bloomberg News.
Also, even attending an open house, there's a sense that there might be some discomfort around that as well.
One seller even canceling the open house after going through all the preparations.
She got professional pictures taken. She got fresh flowers in the vases, had scheduled an open house for one day later. Thought, wait, no.
But that doesn't mean there are no buyers, including some from overseas.
We have heard of people from Europe and Asia actually looking at apartments through FaceTime, having the brokers FaceTime them or do a virtual tour.
And that's your Bloomberg Real Estate Report. I'm Denise Pellegrini.
Business is constantly evolving. Is your financial printer evolving to keep ahead of the curve? At Command Financial, we are redefining financial printing by providing industry-leading expertise, leveraging technology, and honing processes and best practices. Every day, Command helps SEC registrants, as well as members of their working groups, including securities attorneys and investment bankers, prepare, file, and disseminate regulatory and disclosure documents, such as registration statements, M&A documents, and mutual fund prospectuses and reports. Command provides a full range of services to help you effectively complete your deal, meet your disclosure requirements, and achieve your shareholder communications objectives. Visit our website at commandfinancial.com and learn how we're evolving, not only with the times, but also with your business requirements. Command Financial, redefining financial printing.
Delayed at the dentist and now you're late for school pickup. You need a free now. Need to take the dog to the vet before lunch. Should have gotten a free now. Trying to get 4 kids and their baggage to the airport. Free now. Sometimes you can't get from A to B fast enough. Download the Free Now app today for quick pickups and reliable drivers, no matter the situation. Less hassle, more hustle with Free Now.
Hey, have you heard? The Mayor of London has launched his latest van scrappage scheme to help tackle London's toxic air. Small businesses or sole traders like me with a polluting van could now get £7,000, which you could use to trade up to a Euro 6 vehicle. And you could get an extra £2,500 towards running costs if you go electric. The scheme is now even easier to qualify for, and it's open to any businesses with up to 50 employees, like mine. So, I'm going to search TfL Scrappage to see if I'm eligible and apply. You should do the same. To the Mayor of London and TfL, every journey matters.
At the Bank of Santander, they've created Stan, a smart bot that can predict the future of remortgaging.
All right, Stan, will my mortgage rate go up?
1955 was the last time Newcastle won the cup.
No, try not to mumble.
Playing, let's get ready to rumble.
Meanwhile, at Santander, they can't predict your future, but they'll help secure it with great mortgage rates fixed for up to 10 years. See what's possible at Santander.
Early repayment charges apply. Lending subject to status and criteria. Your home may be repossessed if you do not keep up repayments on your mortgage.
Headlines and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and on Quick Take. Take by Bloomberg. This is a Bloomberg Business Flash.
And I'm Karen Moscow. The rally in U.S. stock futures that earlier triggered trading limits is starting to fade on reports that the timing of any Trump administration stimulus to combat the coronavirus remains uncertain. We check the markets every 15 minutes throughout the trading day on Bloomberg. S&P futures still higher, up 72 points. Dow futures up 624. And NASDAQ futures up 230. The DAX in Germany's up 1.6%. 10-year Treasury down 24 seconds, yield 0.61%. Yield on the 2-year 0.41% and the 30-year yield 1.09%. NYMEX crude oil is up 8% or $2.47 at $33.60 a barrel. COMEX gold is down 0.8% or $13.70 at $16.62 an ounce. The euro 1.1387 against the dollar. British pound 1.3028 and the yen at 103.99. And that's a Bloomberg Business Flash. Tom and Lisa.
Karen, thanks so much. This could be really, really interesting now. Luke Kawa with us looking at all the different markets, and as Karen did with that wonderful world-class data check, we've reversed. We were up 1,100 Dow points. We're now up 670 Dow points. We're still up. We're still bouncing off the horrific lows of yesterday. And thank you so much, folks, for your comments on the show we did last night at 5 p.m. on Bloomberg Television. It was fun to do that with Lisa and with John Farrow. In the bond market, there's the idea of round trip as well. Luke Kawa joins us here, and with a 30-year bond in that historic moment of under 1%, migrated down under 0.80%, maybe even under 0.70%, and then has worked his way up and rolleth over as we see. Luke, what is the view of a sustained 30-year bond under 1%? Do you perceive it as a one-off yesterday, or does it have the ability to sustain under 1%?
I mean, you can't not look around the world and the experience of the past few years and go, well, this is, the U.S. can uniquely stay at higher trend growth than the rest of the world in perpetuity. So, an event like this that is, at some degree a temporary shock could focus the mind more towards this kind of longer term trajectory we have. And you can't argue with the longest, most unbroken trend in financial markets, and that's in sovereign bond yields.
Right. What did you see in credit yesterday? I mean, sovereign's what we cover all the time as well, and there it is under 1%. But what did you observe in credit yesterday that was unique?
So I thought in the history of the IG CDX index, which goes back to, I believe,
IG
some point
is investment grade.
Yes, which goes back to about 2011, some point in there. If you're charting the daily net change in that spread, so how much spreads widened or tightened versus how much the S&P 500 gains or loses, it's right. It's a lot of events fall very neatly upon that regression line. If stocks are off 2%, spreads have widened by about 10 basis points. Yesterday is one of those you need to, expand your chart horizon. It's nearly completely off the chart. It's the most anomalous underperformance of investment grade CDX. You had spreads widened by 27, nearly 28 basis points.
Let me translate
and the S&P 500 off, 7+%.
People were scared. And people were repricing the concept of risk within the top-rated corporate debt. That is a way of translating what you just said. There was a mass repricing, the likes of which we have rarely seen in history.
And we know the mass repricing was also happening in stocks, but the fact that it happened to a higher degree in credit is the scary part here, because that's your real business cycle rolling over, kicking in, worst case scenarios being realized when you start to see people worrying about that kind of jump to default type move in credits.
So this actually is one of the key questions going forward, right? Especially because credit supposedly leads. Typically, it shows the credit cycle or the economic cycle turning before other asset classes. Not this time. We definitely saw credit sell off in tandem, or in some cases excessively, relative to equities. Going forward, though, is this saying that people are preparing for a recession, that it will not turn around that quickly?
See, I have trouble answering that question in terms of what does it mean to be pricing in a recession. I don't know how to distinguish that from what does it mean to be pricing in a material hit to growth whose magnitude and duration is unknown, which it seems like we're doing. But I would say definitely credit will continue to be the space to watch in discerning the duration of any downturn. Just because I think the consensus is still, if this is a temporary phenomenon that does not leave lasting marks on the services sector, then credit should be able to get through this.
And now for a pointed question. We can do this with Luke Howe of Bloomberg Intelligence. Luke, I'm looking at February of 2016. I'm also looking in 2018, call it December of 2018, the ugliness of that Q4 that we saw. The credit default swap 5-year investment grade piece was very pointy, just like it is now. Lots of fear, lots of anxiety, and it was wildly stochastic. And what I mean by that, folks, is up we went in fear and we came right back in as well. Why is this time different? Do we go up in fear here and the system and finance turns right around and slams the fear away and brings us back to normalcy?
Yeah, this is the nature of credit as a product, right? Like, you're going to get these kind of very anomalous moves. And I was going back just today because we were looking at circuit breaker type stuff. So I was scrolling through a lot of headlines from market wraps in 2008, and it's amazing to see just the headlines, because they do remind you of today. And like, stocks rally a zillion % on stimulus hopes, on hopes to invest in bank, and hopes TARPs will pass, etc. And then the next day stocks fall by the same amount on fears that it won't. So these kind of things where policy matters, and policy matters have a key determinant in the duration and magnitude of the downside, that's where you get these kind of big moves in credit, and could go either way completely.
When you talk about policy response, a headline crossing that Germany is weighing bank capital relief to counter the damage from the coronavirus's spread. And this, I think, is really interesting, sort of the bank lending function, where they're going to step in here, provide credit to some of these companies that have maturities that come due, to sort of stave off the default risk, right? I mean, this is sort of one of the key questions, Tom, is how close are companies actually getting?
But that's a corporate response. Are we going to see an individual voter response? I mean, whether it's Germany or the United States, the specificity here is really lacking. I mean, they're going to assist corporations, right?
Well, the idea is that basically you could say to banks, you could hold less capital if you use it to go lend to corporations.
And on that note, an interesting headline, and I think one of the more encouraging headlines you'll probably see, is that Royal Caribbean, a company which is clearly in the front lines of companies that are going to be impacted by the coronavirus and potentially for a longer time, still able to boost its credit facility by over $500 million. That, to me, if banks are at this juncture still willing to extend credit in that manner to companies clearly afflicted, that's good news, right?
Look, thank you so much. Greatly appreciate it, with Bloomberg on bonds and how they fold into the greater markets as well. S&P futures up 94. Dow futures up 807. I'm going to call it a churn after a more buoyant 2 hours ago. And yields are higher, 0.42%, and the 2-year 0.64%, 10-year. And we're really watching the 30-year under 1% yesterday. That was historic, 1.13% as well. Oil up $3, call it $34. West Texas Intermediate Brent, $38 the barrel. This is Bloomberg.
Elite advisory firms
A change is coming. Millions of people across the UK are realising that if their broadband's out of contract, they could be out of pocket. So it's time to switch and save with Vodafone Superfast Broadband for £21.95 a month. Join the Great British Broadband Switch today. The future's exciting. Ready? Vodafone.
18-month contract subject to credit check. Superfast 1, 73% of customers receive sync speeds above 35 megabits per second. Source Ofcom fairer pricing. Price may change during your contract. See vodafone.co.uk/broadband.
It's not always obvious, but 1 in 5 people in the UK are disabled. So if we're sitting in the priority seats on the bus or train, lost in our books or wrapped up in the latest box set, let's not forget about the people we share our journeys with. Let's pop out of our shells every now and then and ask if someone needs that seat more than us. Remember, it's everyone's journey.
The famous five were discussing their next adventure to Cardiff.
Let's visit the Millennium Centre, said Dick. The National Museum, added Julian. The castle, cried Anne. Dick jumped up. We'd better leave now. Cardiff's so far away. Relax, said George. It's faster than you think by train. Anyway, we can't go yet. You're still in your pyjamas.
London to Cardiff in as little as 1 hour 42 minutes. So adventures are closer than you think. Great Western Railway. Adventures start here. Fastest train from Paddington to Cardiff Central. Terms and conditions apply.
At the Bank of Santander, they've created Stan, a smart bot that can predict the future of remortgaging.
All right, Stan, will my mortgage rate go up?
1955 was the last time Newcastle won the cup.
No, I'll try not to mumble.
Playing, let's get ready to rumble.
Meanwhile, at Santander, they can't predict your future, but they'll help secure it with great mortgage rates fixed for up to 10 years. See what's possible at Santander.
Early repayment charges apply. Lending subject to status and criteria. Your home may be repossessed if you do not keep up repayments on your mortgage.
At Asda, with our great range of beers and cider, it looks like you're hosting. Get 2 packs for just £18 or just £10 each. Like 12 bottles of Corona or 10 cans of Copperberg Cherry. Cracking brands, refreshing prices. Don't compromise. Asda. Save money. Live better. Selected stores subject to availability. Offer ends 18th of March. 330 millilitres each. Drink aware.
Discover more tech, comfort and style for less. Upscale your drive at this year's Nissan Red Tag event with an additional £500 deposit contribution at 4.99% APR representative, available when you buy a new Nissan Micra N-Tech, Qashqai N-Tech or the 100% electric Nissan Leaf. Offer valid until March 31st. Offer valid on 4.99% APR representative. PCP product participating dealers only. Private retail customers only. Nissan finance subject to status 18+. Excludes CI and NI. For full T's and C's visit nissan.co.uk/redtag. Nissan. Innovation that excites. Make sure you don't miss out by visiting Westway Nissan.
You love TuneIn for live breaking news from CNN, MSNBC, Fox, CNBC, and more. But when you can't catch your favorite show as it airs, it might just be a click away as a podcast. Search your favorite news station to explore all the on-demand news shows on TuneIn.
You have to get it right the first time.
We always talk about the losers in a trade war.
You benefit if you're just further away from China.
So that you can too.
What are the ramifications if she crumbles or doesn't crumble?
Bloomberg Radio, the Bloomberg Business Radio.com and iHeartRadio apps and BloombergRadio.com. Bloomberg, the world is listening. From the financial capital of the world, 24 hours a day at Bloomberg.com, on the Bloomberg Business app, and on Quick Take by Bloomberg. This is Bloomberg Radio. This is Bloomberg Surveillance Economics.
Once we get through coronavirus, it's very supportive and very stimulative.
Central banks themselves got caught hostage by markets.
Finance.
OPEC Plus is at war with itself.
We know we can create America's energy independence again.
Investment.
The market's anticipating the rate getting very close to zero in fairly short order.
Volatility is back, so that's going to make for more cautious trading.
Bloomberg Surveillance with Tom Keene and Paul Sweeney on Bloomberg Radio.
Good morning, everyone. Bloomberg Surveillance, Tom Keene and Paul Sweeney. Thrilled that you're with us this morning. Lots going on after a most historic day yesterday. Paul, we did this special last night at 5 p.m. just trying to collate the emotion of what's out there. And I would really say, bounce today, but there's no reversal of emotion.
No, there really isn't, Tom. It's a little bit, we were limit up a little bit earlier on the futures. We've backed off from that a little bit. So we'll see how we trade today, but you don't feel the conviction in there at all. We're not getting anything from the White House today, Tom, in terms of a fiscal stimulus that the president had suggested would be ready today. So that's taken a little bit of steam out of the futures.
Lots going on as well. Let's do this, folks, just because of the lift in the market. Let's get right to the stock report this morning because there's a lot to talk about there. We'll give him an extra minute or so this morning as well. He deserves it. David Wilson.
Thanks, Tom. You look at the energy stocks. They're bouncing back after the S&P 500 Energy Index suffered the biggest loss in its 30-year history and closed at its lowest level since August 2004. So you put that all together, you're getting a recovery. Just to give you some examples, ExxonMobil's up 9% in early trading. Occidental Petroleum's up 28%. And in oil services, Halliburton up 18%. Then you look at the airlines. They're rising even as they withdraw forecasts for this quarter and year because of the coronavirus outbreak, which has limited travel demand. American and Delta both pulled their forecast today. American shares up 5.5%, Delta's up 3.5%. Then you see Southwest up 4.5% and United up 6%. Royal Caribbean withdrew its forecast, and those shares are up 7%.
Why is that? I mean, explain. This is odd, right?
Well, I mean, it's odd in the sense that, you wouldn't expect that kind of a response necessarily. But, I mean, it's sort of inevitable that these companies are going to have to go back and, really figure out what their business looks like in light of the virus and the effects on travel.
Are they going to have to just scrub down every inch of every ship before these things, get back?
They're no doubt doing that already.
Yeah.
So you've got Royal Caribbean shares higher. Look at their peers. You see Carnival up 9%, Norwegian up 10.5%. Then we turn to the banks. And, by the way, yesterday, KBW Bank Index fell to a record low relative to the S&P 500. The previous low had been set in March 2009. So you're getting a rebound. Bank of America is up 6%, Citigroup up 5.5%, JP Morgan Chase and Wells Fargo both higher by 5%. Microsoft's up 4.5%. Now, Wedbush is saying the software maker's cloud computing business may be worth as much as $1 trillion on its own. And this is a company that in total was valued at $1.1 trillion. Microsoft fell during the past 3 days by 12%. That was the stock's biggest loss in 5 years. Another stock that's rebounding after a 3-day slump, General Electric. Now, it had been down as 25%. That was the steepest decline over a 3-day period since October 1987. Wow. Today, GE's up 6.5%. On the deal front, most active stock is Cypress Semiconductor. It's up 46.5%. The Committee on Foreign Investment in the United States cleared an $8.7 billion takeover of the chip maker by Germany's Infineon Technologies, the panel finding that there were no unresolved national security issues.
Again, I ask, where are the arbitrators there? I mean, this is the second deal where we've seen a regulatory move and then it just this monster move in the stock.
Well, I suppose they're a little concerned, when you consider all the back and forth that has occurred in deals that cross borders lately. One that's more domestic, McKesson's up 3%. The drug distributor received about 7 shares for everyone accepted in a tender offer for its stake in healthcare technology company Change Healthcare, which went public last year. Change Healthcare up 13% in early trading. We've got earnings to talk about. Dick's Sporting Goods up 10%. The retailer's fiscal fourth quarter earnings and revenue beat analyst average estimates in the Bloomberg survey. And on the other hand, Vail Resorts down 4.5%. Right. The ski resort owner's profit and sales for the fiscal second quarter trailed estimates. And Vail Resorts, like the airlines, like Royal Caribbean, withdrawing its full year forecast.
The message here, and Chris Hopper with us, and Chris, what's important is you understand between the three of us, we do go back to the panic of 1907. David, life goes on is the message I hear from you. This is such an important message for everybody worldwide and across this nation. Doom and gloom, world's coming to an end, bounce back sort of kind of like today. And you're telling us the minutia of these companies is they just keep doing business.
Well, they do. It's not quite the same business for a whole lot of companies now that it was even a couple of months ago. When you look at the airlines and the cruise lines and even a company like Vail Resorts, life goes on, though.
This has been the most optimistic thing I've heard today. Is David Wilson just saying life goes on? Paul, what's so important about this is what you and I have blown in the last 3 days is we're not talking about this Tuesday of March in this important election and with Mr. Biden's ascendancy or presumed ascendancy, the impact of labor.
Absolutely. Chris Opfer, he is deputy team lead for labor and employment news for Bloomberg Law. And again, Chris, great to have you in here today because it is Super Tuesday redo, I guess, and they're in that a lot of big states, including big labor states like Michigan. And we think about the Democratic Party, we think about big labor. Where is big labor today as we approach the 2020 election?
Well, big labor, when you talk about the national unions, are sort of still on the sidelines. We've seen a lot of endorsements on both sides, both for Senator Sanders and Vice President Biden. But those are coming from important but also local unions. So they've been certainly courting that support in all of the Super Tuesday states and in the Big Tuesday states this week. But the national unions have largely been on the sideline, with the exception of the Machinists Union, which came out earlier this week in favor of Vice President Biden.
Is that typical? Do they wait till we get closer to really identifying a likely candidate?
Well, that was what was expected this time around because of all of the heat some of the unions got for their members. Sort of thought that maybe some of the unions jumped the gun last time around, going all in for Hillary Clinton when some of the base was really ardent Sanders supporters. And I think the unions are happy to see a wait-and-see approach now, especially we'll see what shakes out after today. If there's a clear winner, front runner heading into the future, you may see a few more unions get involved.
So, Chris, how has the union movement in the United States fared under the Trump presidency and administration?
That's an interesting question because Trump in 2016 closed the gap significantly amongst union households. Hillary Clinton still won, but it was a lot more narrow than some folks had expected. And I would say that by and large they haven't seen much of the gains that I think the rank and file union members were hoping for. Union numbers themselves still hover at around 6% of the private sector workforce, so there's not much of a change there. And while the unemployment rate is falling, we've seen that the wages have not changed.
What was it back in the day, Tom? I mean, that 6% number jumped out at me too, but it's much higher, right, Chris? I mean, the union membership at its peak in, I don't know, the 50s or whatever.
Well, ginormous, and by sectors, there were sectors where it was 60, 70, 80%, like autos and railroads and the rest. Fold in your labor analysis, and folks, we should explain that Mr. Ofer is just definitive on looking at labor at Washington and within America as well. Fold in labor and this Democratic Party with the new focus on the Latino vote. Are Latinos labor? Are the two? Is the Venn diagram overlapping?
Well, I think so, especially in places like Nevada, where the culinary union is quite strong. And what you're seeing there, at least when it came to the culinary union, was healthcare really driving the conversation, and the union there not so sure about Medicare for all.
Well, I was going to let's go through that right now. Senator Sanders is saying Medicare for all. Is that a labor issue or is it a Latino issue? I get that it's a Latino issue. Latinos really want Medicare for all. Does labor want Medicare for all?
By and large, the answer has been no. And the idea there is that they've already worked so hard at the bargaining table to get their members these great healthcare plans. So it's not much of a winner for them. I mean, the flip side of that argument, though, is that if you had Medicare for all, the unions could spend a lot more time bargaining over other terms and conditions, and they wouldn't have to put so much capital towards healthcare.
I see a story out just recently as we're talking about unions. The AFL-CIO suing the Trump administration. I don't typically see unions suing the government.
Yeah, and I think you'll see a little more of that between now and when folks go to the ballot boxes in November. There are a slew of various rules coming out of the Trump administration that are overhauling a wide range of aspects of the union election process, and that's what the AFL was out with a lawsuit on Friday over. Basically, the rule makes it extends the time in which those elections take place. The idea on the union side is that the more time there is, the more time there is for your employers to lawyer up and try to slow down the union process.
So is Trump perceived as pro-union by membership or not? It seems a mix because you look at some of the Make America Great rallies again, and it looks like a lot of union members there. I see like the T-shirts and so on. I'm just not sure how pro-Trump union membership is in this country.
I think there's a disconnect between the union leadership and their view of the Trump administration and the rank and file folks by and large. And the union leadership has a good argument about all of these policy changes that could be detrimental to workers. But it's hard to take these sort of comprehensive, complicated policy issues and explain those to regular folks sometimes.
Chris Ofer, thank you so much. Greatly appreciated. On labor, and that's something we don't talk about enough here. Futures really have changed. Up 87, Dow futures up 741. We're up 1,100 Dow points before. So what's that math? I'm going to call it in 400 points from the enthusiasm that we saw earlier. With our news in New York City, here's John Tucker.
All right, Tom and Paul, President President Trump surprised members of his administration by promising details of an economic package to be unveiled today. Trump's administration has been working on potential stimulus measures for about 10 days, but were unprepared to provide details this quickly, according to sources who spoke to Bloomberg. BlackRock Vice Chairman Philip Hildebrand says coherent U.S. leadership is urgently needed to prevent a panic in markets from spiraling into another 2008-style financial crisis. Cases of the coronavirus have now surpassed 113,000 worldwide, and deaths exceed 3,900. Italy was the first country to attempt a nationwide lockdown as cases topped 9,000 overnight. The government there may try to boost a planned stimulus package in Europe's worst hit nation and is negotiating with banks for mortgage relief. President Trump spoke with Saudi Arabian Crown Prince Mohammed bin Salman by phone yesterday to discuss the oil price war. That's according to two people familiar with the call. The discussion comes as Saudi Arabia and Russia engage in a battle of economic might over the global oil market and endanger the U.S. shale industry as a result. And Michigan boosted Bernie Sanders' 2016 presidential bid, but 4 years later, the state could relegate him to the role of protest candidate. Michigan and 5 other states are holding presidential contests today at a critical point in the Democratic race. Former Vice President Joe Biden looking to cement his front-runner status after winning the most delegates during the Super Tuesday voting last week. Global news 24 hours a day, on air and on Quick Take by Bloomberg, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm John Tucker, and this is Bloomberg Tom.
John Tucker, thanks so much. Amy emails in and says, please ask John Tucker, how's Biscuit? Is Biscuit surviving the virus scare and all that?
Biscuit is corona-free, for all that I know.
Are you corona-free? And I mean the beer, not the virus.
Oh, definitely not.
Well, it's good. Vet Bill, somebody asked about it. He said he's getting a puppy cut this weekend, you know.
I do believe it can be transmitted to dogs. That was the case.
There is news on that.
So be careful.
Futures up 89. Stay with us. This is Bloomberg.
Hey, y'all. Jeff Foxworthy here. Now, if you've ever found yourself repeating the same thing over and over for 75 years, you might be Smokey Bear.
Only you can prevent wildfires.
That's why I'm filling in for Smokey to switch things up, because there's a lot more to say. And I should know because my grandfather was a firefighter. And one of the things he taught me is that the people that love the outdoors the most are often the ones accidentally starting wildfires, which means always BYOB. No, bring your own bucket to the campfire. And be extra careful with things like burning yard trimmings. Don't just walk away, or chances are you might be starting a wildfire. So for the love of the outdoors, go to SmokeyBear.com to learn more about wildfire prevention. Brought to you by the U.S. Forest Service, your state forester, and the Ad Council.
25 years ago, NJIT graduate Dick Sweeney co-founded Keurig Green Mountain, a company whose incredible innovations changed the way the world brews a cup of coffee. Today, he lectures widely on business leadership and is a strong advocate for NJIT's work to combine business education with the power of STEM.
NJIT is definitely fostering the innovative thinking for budding entrepreneurs simply because that's the world we live in. NJIT is producing students that have been trained, educated, and given the business acumen to be a contributor to a company. The distinct mission is to develop great STEM scholars. The attributes I've always looked for in team members are heart, smarts, guts, and luck. So we want people with passion, intelligence, courage, and never discount luck. The student coming out of NJIT has experienced all of that.
NJIT, New Jersey Institute of Technology. Learn more at njit.edu.
Hey, have you heard? The Mayor of London has launched his latest van scrappage scheme to help tackle London's toxic air. Small businesses or sole traders like me with a polluting van could now get £7,000, which you could use to trade up to a Euro 6 vehicle. And you could get an extra £2,500 towards running costs if you go electric. The scheme is now even easier to qualify for, and it's open to any businesses with up to 50 employees, like mine. So, I'm going to search TfL scrappage to see if I'm eligible and apply. You should do the same. To the Mayor of London and TfL, every journey matters.
Fairy Bikers here. This message goes out to something very special.
Yes, we're talking to you, chicken.
Maybe we've been seeing too much of each other.
But times have changed, Dave.
We've been cheating on meat.
Thing is, no stocks make veggie dishes so irresistible that cheating on meat is proper tasty.
Our dear chicken, you were the fire in my life, but it's all about you now, aubergine katsu curry. Prepare to be wined and dined, my love.
Cheat on meat with no veggie stocks.
From home offices to shared workspaces, however you work, at Starling Bank, we'll help you to keep your business flying. With easy integrations that connect your banking with your accounting software, your business is ready for takeoff. Starling Bank, helping business fly.
And breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and on Quick Take by Bloomberg. This is a Bloomberg Business Flash.
And I'm Karen Moscow, and U.S. stock index futures are off their session highs on reports that the timing of any Trump administration stimulus to combat the coronavirus remains uncertain. We check the markets every 15 minutes throughout the trading day on Bloomberg, with S&P futures up 88 points, Dow futures up 743, and NASDAQ futures up 269. The DAX in Germany is up 2%. 10-year Treasury down 26/30 seconds, yield 0.62%, yield on the 2-year 0.41%. And the 30-year yield 1.08%. NYMEX crude oil is up 7.8%, up $2.42 at $33.55 a barrel. COMEX gold is down 0.7% or $12.20 at $16.6350 an ounce. The euro 1.1384 against the dollar. British pound 1.3033, and the yen is at 104.16. And that's a Bloomberg Business Flash. Tom and Paul.
Thank you so much, Karen. Greatly appreciate it, Paul. Up 87. I mean, it's a better day.
It's a better day, Tom. I think we'll see what kind of follow-through we get here when you get the cash market open here. Let's get some perspective, Tom. Our good friend Dan Alpert, Westwood Capital founding managing partner. He's also a Cornell University Law School fellow. He joins us here, Tom. Dan, so good to have you on the phone here. Help us put into perspective kind of what we've experienced as investors and as market participants really over the last couple of weeks, but especially over the last 24 hours.
I think the thing that is really striking me is that the bond market is screaming right now for fiscal stimulus. This is such an incredible change from what was generally accepted polite conversation in the last crisis. I mean, look at tips right now. I don't know if they still are. I haven't looked at my screen recently, but they were negatively yielding across the entire spectrum of duration a couple of days ago. That's the market expecting sustained deflation. This is the market saying we don't believe that monetary policy has any headroom whatsoever, and that tax cuts don't transmit to investment. So you're looking at a huge sea change. I was telling Tom earlier today that I was at a dinner party and everyone was asked to raise their hands as to whether or not they thought monetary policy could do anything. Now, nobody raised their hands.
Yeah, I was at a dinner party at McDonald's over here in 3rd Avenue and the same thing happened. Dan,
they asked what it was.
Your piece 3 or 4 days ago was extraordinarily prescient. And then like 2 hours ago, CNBC has a headline that there's getting nothing done at the White House. Here, once again, we can't decide how to affect policy because we have, whatever anybody's politics, a belief that Washington should not affect policy. So what fiscal policy can we agree on in an era, in a milieu where we really don't want Washington to agree on anything?
Well, I think we have to divide it between two issues. One is something that works really, really fast, which is hard to actually make happen. I agree that, you can inject money into consumers' pockets, maybe create a little bit of a pickup. Obviously, the politicians who are trying to get re-elected are going to be pushing for that. I don't think you can stop them from doing it. But it's about time that we actually grabbed the tiger by the tail, took advantage of the fact that people are throwing money at the United States government, to say nothing of other governments that print their own currency and have zero credit risk, and are effectively saying, go ahead, take the money, invest it in rebuilding your countries, rebuilding infrastructure, hire people for construction jobs and other high-quality jobs that pay well, pull up your labor force, increase consumption by the people that you've hired, and give me a plan going forward. We've spent a dozen years since the crisis began in 2008. Really avoiding this subject. I mean, there's a little, obviously, we had a little bit of fiscal stimulus during the Obama years, but it was nowhere near sufficient, and it certainly wasn't sustained. So that's what the debate needs to change to at this point.
I just want to say, Paul, United Airlines out with a lot of headlines withdrawing their 2020 guidance, which I'm not surprised by, because last night at the dining room table, I withdrew my guidance. I withdrew my guidance for 2020.
So, Dan, I mean, given the lack of, let's say, clear policy coming out of Washington here, and we can compare and contrast it to what we experienced in the financial crisis, is there a risk here that this coronavirus contagion could really kind of spiral into something more substantial?
Well, I think my big concern going forward, I mean, I'm accepting what medical professionals tell me, and certainly I'm in no position to second guess them. I don't, I have no scientific background in this area. But, people are saying that this particular virus is likely to meet its match at some point where, temperatures increase slightly, the rate of spread seems to be containable. The Chinese seem to have demonstrated that. Between awareness and containment, the crisis will become less so. What I'm really concerned about going forward is what happens out of China. China now has to play a big game of catch-up. It's sitting on enormous inventories of raw inputs, huge inventories of steel that need to make their way into intermediate goods. Those intermediate goods will need to be sold. What I'm concerned about is that we experience, probably around the third quarter, a round of what is effectively dumping. I know that's not a polite word, but effectively having China use every channel it can to push this product out and to push it out on developed consuming nations. And so, that is a sort of a second tier of disruption that I'm expecting as we go into the year.
And do you think, how confident are you that this administration, this government will, from a fiscal stimulus standpoint, get something reasonably done?
I don't think anything meaningful can get done before the election. You've got a huge ideological rift that would need to be overcome. You'd need for a lot of people in the Republican Party to suddenly get religion about borrowing money, no matter how cheap, and spending it. I don't see that happening before the election. It's, of course, things get bad enough, anything's possible. But it just doesn't seem in the cards in an election season. So, to a certain extent, this was a very badly timed crisis.
And I guess it really is up to the Fed then.
Yeah, well, I mean, the Fed is going to cut rates again. They're going to accommodate the fact that the long end has fallen below the policy rate, which is an unsustainable situation. And they're going to cut rates commensurately, but that'll put them right at the zero lower bound, and that'll be that. And, we've seen no real evidence of that type of monetary policy change having a meaningful impact on the economy other than through one transmission mechanism, and that's residential mortgages, right? People go out, and there'll be another refinance boom, and people will be refinancing their home, and they'll be maybe taking a little bit of money, certainly improving their
All right, Dan, thanks so much for joining us. We really appreciate getting your thoughts here. Dan Alpert, Westwood Capital founding managing partner. Also, he's doing some time up at Cornell University Law School. He's a fellow there.
Oh, that great unemployment series, the Job Quality Index, is just absolutely superb math.
Yeah, just outstanding. So we appreciate having Mr. Alpert with us. Futures, Tom, we're sitting right here. S&P up about 90. It's Dow up 670, 660, kind of up there. So we're kind of holding here at this level. We're a little bit higher earlier, but we're getting there. We'll get the market open for you. Green on the screen here. Let's see how we can, get this market open and see how it will trade after yesterday's carnage. This is Bloomberg.
Asset managers who seize change to launch new strategies, add distribution channels, or exploit new technology to re-engineer the investor experience are often rewarded. However, in an industry paralyzed with complexity, few act with agility or decisively. Few run their businesses strategically, yet the most competitive managers in the market know with the right partner and a flexible operating system, you can. Go boldly toward change with SEI Investment Manager Services.
I'm Steve Meyer, president of SEI's Investment Manager Services. At SEI, we understand the emerging forces that will define success for asset managers and what firms will need to compete tomorrow. That's why we continually optimize SEI's global operating platform. If your business requires greater agility, our advanced technology, integrated best-in-class systems, and multi-asset expertise can be your catalyst for business transformation.
With SEI Investment Manager Services, you lead the charge in a competitive marketplace. Learn more at SEIC.com/seize change.
Business is constantly evolving. Is your financial printer evolving to keep ahead of the curve? At Command Financial, we are redefining financial printing by providing industry-leading expertise, leveraging technology, and honing processes and best practices. Every day, Command helps SEC registrants, as well as members of their working groups, including securities attorneys and investment bankers, prepare, file, and disseminate regulatory and disclosure documents, such as registration statements, M&A documents, and mutual fund prospectuses and reports. Command provides a full range of services to help you effectively complete your deal, meet your disclosure requirements, and achieve your shareholder communications objectives. Visit our website at commandfinancial.com and learn how we're evolving, not only with the times, but also with your business requirements. Command Financial, redefining financial printing.
This is a Bloomberg Money. This one shouldn't take long. Of course, if it had a cover, I might not be bothered. Can't see what's under there. And they'd have chained the back wheel. It would have taken me much longer, especially if the chain's off the ground. Makes it harder to cut. This one doesn't even have a lock on the front. So, in the time I've been talking to you, I've nicked it.
On average, in London, a scooter or motorbike is stolen every hour. Make sure it's not yours. Lock your bike, chain the rear wheel, and cover to make it harder to steal. Lock, chain, cover. The Met Police.
Delayed at the dentist, and now you're late for school pickup. You need a free now. Need to take the dog to the vet before lunch. Should have gotten a free now. Trying to get 4 kids and their baggage to the airport. Free now. Sometimes you can't get from A to B fast enough. Download the Free Now app today for quick pickups and reliable drivers, no matter the situation. Less hassle, more hustle with Free Now.
At the Bank of Santander, they've created Stan, a smart bot that can predict the future of remortgaging.
All right, Stan, will my mortgage rate go up?
1955 was the last time Newcastle won the cup.
No, try not to mumble.
Playing, let's get ready to rumble.
Meanwhile, at Santander, they can't predict your future, but they'll help secure it with great mortgage rates fixed for up to 10 years. See what's possible at Santander.
Early repayment charges apply. Lending subject to status and criteria. Your home may be repossessed if you do not keep up repayments on your mortgage.
From the Bloomberg Interactive Broker Studio in New York, Bloomberg 1130 to Washington, D.C., Bloomberg 99.1 to Boston, Bloomberg 1061 to San Francisco, Bloomberg 960 to the country, Sirius XM Channel 119, and around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Surveillance.
Good morning, I'm Karen Moscow, along with Tom Keene and Paul Sweeney, and the opening bell brought to you by SEI. Asset managers don't get results that are off the charts when their solutions are off the shelf. Learn how SEI's operating platform can turn infrastructure into a competitive advantage at SEIC.com/IMS. The S&P 500 is higher at the open, up 3.4% or 94 points at 2840. Dow Jones Industrial Average up 3.7%. It's up 861 points at 24,710, and the Nasdaq's up 3.6% or 285 points at 8237. 10-year Treasury down 1 5/32, yield 0.65%. The yield on the 2-year 0.43%. NYMEX crude oil up 8.3%, up $2.58 at 33.71 a barrel. COMEX gold is down 0.9% or $15.40 at 16.60 an ounce. The euro 1.1376 against the dollar. The yen 104.36. Tom and Paul.
Thanks so much, Karen. Greatly appreciate it. And thank you, Karen, again for world-class data checks here over the last number of days. We're open. We're going to watch it carefully. SPX up 94 points, Dow up 877 points, putting in a level of 24,721. As I mentioned yesterday, the exact close top to bottom yesterday was 5,700 Dow points, which gets your attention. when Barry Ritholtz joined the market, the Dow was at what, like 424?
Seven.
So, 700?
No, seven.
Seven. Back to the 40s.
He's aging, yes.
Ritholtz. He joins
I look
us
good
now.
for my age.
And seriously, folks, for a half hour of perspective here with Paul Sweeney, Barry Ritholtz, and I'll try to add a little bit as I can as well. Barry, what'd you do Friday afternoon? I mean, were you taking calls from people? Go to cash. Come on, Barry, we got to go to cash. What was the emotion Friday afternoon?
So I'm fond of saying the time to read the emergency guide in your seat back is not at 30,000 feet when one of your wings falls off the aircraft. It's while
afternoon.
you're sitting on the ground at JFK and you're 14 of 27 waiting for your slot to take off. And so this is all about planning ahead and making sure that investors and our clients understand that this is a feature, not a bug of markets. This is what markets do. If markets only went up, if they didn't cause gut-wrenching volatility, if it was easy,
right,
what sort of return would you generate?
But what's so important here is to frame where we are. 10% correction. Paul and I argue 18-20% bear market. And the three of us know it is an historical fact you will enjoy a 33 or 35% drop at some point. And we're not even near that. And look at the hysteria Friday.
And take it even a step further. Go back to the lows around Christmas of the fourth quarter of 2018. The market tagged on a 35% move. It was barely a year, something like 14 months. Recovering from a downdraft and moving up that quickly, that creates all sorts of air pockets. And while everybody is looking at the COVID-19 virus and thinking this is going to cause a global slowdown or maybe even a recession, it can't help but feel like this was just an excuse to say we got way ahead of ourselves and we needed to reset. The narratives after the fact always sound convincing, but I can make up a different story for every move in the market, none of which are actually truthful or accurate, because we just don't know.
So, Barry, when we look at some of the market activity in treasuries, in equities, and maybe even some of the oil, were you sensing any kind of panic selling, capitulation yesterday? What did it feel like to you?
So, first of all, I have my terminal up and I'm watching the screen flicker all day long, and I'm fascinated by that. But second, we start looking at different sectors to kind of get a handle on how much has fallen, how far, how fast. As much as this has been a rapid drop across the broad indexes, look at the oil sector from the 2014 peak. 2014, that's 6 years ago. It's down 90%. The worst of the NASDAQ was 81%. In 2000 to 2002, that peak to trough was barely 80%. This is 90%. And essentially, the market seems to think that oil is going away. I don't care how successful Tesla is and how much we move towards EV, you're still going to have a demand for oil, not just for gasoline, but oil is a key component of so much material and manufacturing. The old joke from one of the Saudi leaders where we still can't believe that you people waste all this oil burning it. It's much more useful than that.
Right. So as you look, how do you, I guess the question is, we're getting a little bit of a lift today. How do you kind of put today's action in context of what we saw yesterday and maybe over the last week or so?
So we went back and did the research on this. Mike Batnick is my head of research, and basically said, let's look at all of the moves of plus 3%, plus 4%, plus 5%. And not surprisingly, they all come bunched very close together. If you think about the market like a rubber band, and anytime we move too far in one direction, especially too fast, there's a tendency to snap back. So 2 weeks ago, we had a down 11% move on the S&P. Over the weekend, I think before the weekend, people flattened out their positions. Monday, the market comes screaming back and recovered almost half of that loss. Here we go again. Yesterday, we're down 6, 7, 8%, depending on which market you look at. And lo and behold, today we're looking at, a plus 800 sort of day to start off and maybe even builds. These moves are almost always technical, and it's why market timing is so impossible, because up 8%, down 6%, up 9%, or up 5%, down 9%.
Right.
After all of this, it's almost hard to see where you are.
Let me do a data check here carefully, Paul, to reframe here with Barry Ritholtz. And we say good morning to all of you coast to coast. And Bloomberg 1130 in New York as well. Up 800 points, 24,646 in the Dow. SPX up 83 points, below 3,000, 2829. 28.29 on the Standard & Poor's 500. We had a 54 handle on the VIX, right now 49, so we're in 5 big VIX points. That's a better statistic, but nowhere near where we were 2-3 hours ago. Critically, on the 30-year bond, under 1% yesterday, and at one point under 0.80%. We're back up to 1.12, but Paul, we've really pulled back. We were at 1.25. And we've really come back here in the last hour and a half, 1.12%, up 13 basis points on a 30-year bond.
Yeah, it's a little bit of a lift here, Tom, and it's interesting to see. Again, we'll see, as Barry suggesting, how much we hold here. So, Barry, when you have the volatility that we've had, what do you'd like to go back to sectors that you like, and you just are maybe looking to add to positions at a better valuation? Is that how you think about capital, or do you say, gee, I missed tech? Now tech's, that's 11% cheaper. I'm going to run into tech.
That's a great example, and you have to break up your portfolio, at least intellectually, mentally, into 2 different slugs. One is your long-term, broad-based ownership. Typically, that's 70, 80, 90% of a long-term investor's holdings, and you really just do nothing with that other than rebalance into the fall, so you're buying more lower. But the other thing is, if you have a fund portfolio, and we recommend it's not much more than 5%, we know some people with 10%. If it works out, great. If you lose a bunch of money, hey, it's only 5% of your portfolio. And I suggested the other day you make a list of the things you want to own, but they've run away from you, whether it's something like the NASDAQ Qs if you want to be broad, or specific companies, Netflix, Amazon, Apple, pick your favorite. Try and leg into it on a few trades on the way down. Don't just pick a point where the outcome is binary, either right or wrong, but leg into it as it's falling. Assume that this market sell-off is 30% as bad compared to the 08-09, which was down 57%, and try and buy some on the way down. And then when it turns out you're right, pyramid, add to that position on the way up, and plan on holding all these for a year so you're paying the lower capital gains tax. But don't just say, okay, I have a feeling this is it, and put a giant slug of money to work. Either you're right or you're wrong, and typically that's mostly dependent on luck. But having a plan to buy into an ongoing fall and then add to it on the recovery means your average price is going to be much lower than where the market will probably be if you're just taking a guess, and that's a higher probability sort of trade.
What you learn about the ETFs and all the worries about ETF flows in the shock? Philip Hildebrand was on, the vice chairman of BlackRock, and of course they've got a huge exposure here in developing these products, and he said he was really taken aback by the smoothness of these instruments given the market. Is that the way you perceive it?
It's even better than that. So first, we've been hearing, remember, the people who aren't fans of passive investing or of ETFs have been warning us that it's a bubble, it's Marxist, it's going to destroy the economy. And
when the market goes down, it's going to create massive distortions.
Right. We heard all of that.
Hildebrand said it didn't happen.
And not only did it not happen, Vanguard did a survey. 98% of their clients didn't do anything. They just sat there. They're probably the entity most focused, most known for low-cost index-based investing. So not only did ETFs and passive not disrupt the market, if anything, it provided a little bit of stability, and it showed that all the fears of passive and indexing have been overwrought hysteria from hysteria from people who have a contrary financial interest.
We're going to come back with Barry Ritholtz. We really want to know what his dogs are doing in the coronavirus. We'll get to that in a moment here. Dow up 724,569. The VIX 49.40. With our news in New York City, here's John Tucker.
Yeah, Tom and Paul, at the epicenter of the coronavirus outbreak in China, the government is signaling progress as infections slow and business gets back to work. Let's get more from Bloomberg Daybreak Asia anchor Brian Curtis in Hong Kong.
President Xi Jinping is now in Wuhan for the first time since the disease emerged. China with just 19 new cases, South Korea adding 131, extending its own decline, and 54 deaths out of 7,500 cases, a mortality rate of 0.7%. In Hong Kong, Brian Curtis, Bloomberg Daybreak.
President Trump has yet to be tested for coronavirus, even as his incoming chief of staff, Mark Meadows, and at least 4 other GOP lawmakers put themselves in quarantine after coming into contact with an infected person at a political event. Italy's become the first country to attempt a nationwide lockdown to stop the spread of the highly infectious coronavirus. Health officials there say the impact of the lockdown to contain the virus won't become clear for at least a month. And Joe Biden could take a big step closer to sewing up the Democratic presidential nomination today with 6 primaries.
I don't take anything for granted until the polls close, and we'll see. I think it's going to be, I hope to do well, but, the polls have been wrong before.
He leads Bernie Sanders by 15 percentage points in the Real Clear Politics average of national polls. He leads by 23 percentage points in Michigan, which offers 1/3 of the 352 delegates on the table. Global news 24 hours a day on air and on Quick Take by Bloomberg, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm John Tucker. This is Bloomberg Tom and Paul.
John Tucker, thank you so much. Marcus, pull back. I mean, that's all there is to it. You look at it, Paul, 636. We're up 1,100 futures points earlier on the Dow. And we're now up, call it half that, 629 as well. We're watching the yield on the 30-year bond, 1.11%. After that really historic move yesterday, down below 1% as well. On gold, $16.59 the ounce, down $17. Gold, $16.59, and again, many people looking at a 1,700 print and looking out to 1,800 as well. Please stay with us. Barry Ritholtz with us, and we will continue right now. This is Bloomberg. Good morning.
Watch the sunrise.
This is a Bloomberg Pursuits look at luxury. For the first time, Calabasas, California has eclipsed Beverly Hills in Bloomberg's annual ranking of the richest cities in the U.S., with an average household income of $194,010 a year. Calabasas owes some of its success to the usual reasons: good schools, low crime, open space, but also reality TV fame on Keeping Up with the Kardashians, now in its 18th season. If you decide to visit, swing through American Express's new Centurion Lounge at LA International Airport on the way. The LAX Lounge, which opened Monday, is Amex's 12th and its most ambitious yet. Moonrise and sunrise rooms help travelers transition between time zones, along with free ear reflexology and Reiki energy treatments. Amex's investment in its airport lounges represent a doubling down on travel benefits as a way to acquire and retain premium credit card holders as it fights off Chase. I'm Rote, Bloomberg Radio.
Imagine being denied an apartment because of your religion, or your race, or because you have children, or a disability.
It's so wrong. Yes, but who has the power to stop this?
You do. Each of us has the power. The law is on your side. It's illegal for landlords to discriminate because of race, color, religion, sex, national origin, disability, or familial status. If you suspect that you have experienced housing discrimination, file a complaint with HUD immediately so we can investigate it. Fair housing is your right.
Use it.
To learn more, visit HUD.gov/fairhousing. That's HUD.gov/fairhousing. Or call 1-800-669-9777. 1-800-669-9777. A public service message from HUD in partnership with the National Fair Housing Alliance.
Hey, have you heard? The Mayor of London has launched his latest van scrappage scheme to help tackle London's toxic air. Small businesses or sole traders like me with a polluting van could now get £7,000, which you could use to trade up to a Euro 6 vehicle. And you could get an extra £2,500 towards running costs if you go electric. The scheme is now even easier to qualify for, and it's open to any businesses with up to 50 employees, like mine. So, I'm going to search TfL Scrappage to see if I'm eligible and apply. You should do the same. To the Mayor of London and TfL, every journey matters.
It's coming. Spring cleaning. And every speck of dust in your home will tremble, facing the most powerful suction of any cordless vacuum cleaner. The intelligent Dyson V11 from Curry's PC World. It senses and adapts to all floor types, and with up to 60 minutes runtime, dirt won't stand a chance. But you get a 1 in 10 chance of winning £250 cash when you buy any Dyson cordless vacuum. Heroes of the home at Curry's PC World. Terms and register at currys.win250.co.uk.
You love TuneIn for live-breaking news from CNN, MSNBC, Fox, CNBC, and more. But when you can't catch your favorite show as it airs, it might just be a click away as a podcast. Search your favorite news station to explore all the on-demand news shows on TuneIn.
In case you didn't know, TuneIn lets you listen to the same radio stations you pick up on your home or car radio, except you can hear them from anywhere. If you want to find a station from somewhere else in the world, navigate to the By Location section under Browse. Keep exploring with TuneIn.
Breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and on Quick Take by Bloomberg. This is a Bloomberg Business Flash.
And up here in Moscow, U.S. stocks are rebounding from the worst drop since the global financial crisis after President Trump said he would announce substantial economic measures to combat the fallout from the coronavirus. Right now, the S&P 500 is up 2.3% or 63 points at 2810. The Dow Jones Industrial Average up 2.5% or 584 points to 24,432. And the Nasdaq's up 2.4% or 193 points at 8145. 10-year Treasury down 30 seconds, yield 0.63%. The yield on the 2-year 0.41%. NYMEX crude oil is up 7.1%, up $2.20 at $33.31 a barrel. COMEX gold down 1% or $17.60 at $16.58.30 an ounce. The euro 1.1377 against the dollar. The yen at 104.37. That's a Bloomberg Business Flash. Tom and Paul.
Karen, thanks so much. Again, up 700 now, up 600. The numbers that we're giving you, and Karen Moscow has been just phenomenal at this, folks, is a blur. I mean, Paul, just to look at 33 West Texas, 37 Brent. I mean, that's not even something you can frame around. Not versus 100 in oil, but was it a cup of coffee ago? We were at 60 or 58. What if we go to 54?
Exactly.
Oh, gee, 49 someday. Boom.
Yeah, and Tom, you take a look at the commodities. We've been talking about it for weeks. The commodities and the bond market certainly have been way ahead of the equity markets in terms of framing the risk here.
Michael McGlone, who does magic in commodities for Bloomberg Intelligence,
best charts
with some
Bloomberg.
really interesting. The Bloomberg Commodity Index really breaking down. Right now, Barry Ritholtz with us. He's with his entourage. We're trying to drag him away from them to come back to conversation. Barry, I want to go back to something. And folks, this goes back to the literature of Another Time and Place, where people actually tried to explain investment reality, not theory. And I'm going to make a shout out to Capital Guardian Trust of Los Angeles, who had great studies 1 million years ago. And one of them was, you're in the market, you get out. How hard is it to get out of the market? And how hard is it to get back in the market? And it's wildly asymmetrical. Barry, it's so much easier based on a lot of research to get out of the market. People did that in the last 5 days, and now they got to get back into the market. What's the method to do that?
So, again, this all comes down to thinking ahead and having a plan. We call it a prenup. You sign this before you are married.
Where are we going with this?
Right? And basically this.
Who let him in the room?
If you're scared or you're frightened or even panicked out of the market without any sort of plan, you're not going to get back into the market. We were just discussing this in the office yesterday. Following 0809, I got a bunch of emails in the following couple of years that almost always went like this. I followed you out of the market in the beginning of 08, but when you flipped bullish in March 09, I thought you were insane. And here it is, 2010, 11, 12, 13. We were still getting emails like this. So
what is the plan for someone just like that?
So first, if you're getting out, you cannot hit the eject button unless you know how you're going to get back in. Otherwise, it's just an emotional overreaction, and you're left floundering. And we know panic does not lead to good decision making. That's number one. Number two, if you insist on reducing your exposure, if you say I want less risk and less equity exposure, then you have to come up with some sort of strategy to get back in. Maybe you buy back in as soon as the markets are over the place where you sold it. So net you're at a break even minus whatever taxes you pay. Maybe it's a function of some other indicator, but you have to have some strategy rather than saying I'm going to go with my gut. Because as we saw in 0809, by the time the headlines are getting better, the market is already... think about it. The headlines got worse and worse through February, March, April. By the time things started to look up, the market was 40% off its lows.
I'm going to take it further, Paul, and say too many of the people that do that get out of the market and they struggle to get back in. They really don't believe in the Ibbotson chart. They don't believe in the expansion of equities to perform on an inflation-adjusted basis ahead of fixed income. They don't have that core belief.
So, Barry, what kind of phone calls did you get over the last few days? I'm guessing...
on the dogs.
Exactly. Panic? Did you sense any panic from your clients?
I don't mean to sound arrogant when I say this, but a big part of what we do is making sure clients understand that markets go up and down and we're due for a big correction. This has been the longest rally, blah, blah, blah. That said, we got a couple of questions, mostly about how do you guys look at this as a potential U.S. recession or global recession? What are your thoughts on that? One or two people a little concerned about their equity side. But for the most part, clients,
are they concerned that this could be 2008, 2009 all over again?
Not so much that as more of a 70s, could we just go sideways as everybody hunkers down for forever? And, you know, we don't know enough about the corona, the COVID-19 to answer that definitively, but past infections have all run their course.
Just finally, this is a really brilliant idea of the malaise of the 70s as being a fear out there, particularly to those optimistic. Okay, great, Barry, but the idea you said is the assumption that in recession stocks only go down. Is that proven?
No, in fact, there have been a handful of recessions where stocks went sideways, one or two, if memory serves, where stocks were up slightly. But here's the thing that people forget. The market begins selling off long before a recession begins, and typically 6 months to a year before a recession is formally called by the group, the NBER recession dating committees. So if you're waiting for the time to get out from that group, it's too late. And if you're waiting for the all clear, it's really too late. So you're sort of left to your own devices, and that means either relying on your own instincts, which we know mislead us, or coming up with some quantitative method that its greatest virtue is it's consistent and it could be followed, even if it doesn't give you a perfect exit or entry. At least it forces you back in so you're not sitting on the sideline. You know, if I heard Twitter is always amusing for this. Some people who have been bearish for a decade were pounding their chests on Twitter yesterday because, all right, we may have missed a stock market that tripled, but thank goodness we sidestepped a 19% correction, or even if it becomes a 30% correction. And that sort of ability to lie to ourselves, every human is stuck with.
Twitter's great for that. And then you can retweet those lies. Barry Ritholtz, thanks so much for joining us. Barry Ritholtz, Bloomberg Podcast, Masters in Business
Bring
Anchor.
the dogs next time.
Yeah, bring the dogs next time. It's a dog-friendly place here. Bloomberg Opinion columnist and also Ritholtz Wealth Management here, Tom.
What do you see, Paul? I mean, you know, down 2,000. We did the thing last night, and we go up. We're going up solely because of Lisa Abramowitz. We don't know that. You know, the VIX 49.24. I'm watching the yield market, and it's not that big a bounce off those historic lows yesterday.
No, it's not. And but it's a little bit of a lift here, and I think a stability is not a bad thing for this market. A stable day, a little bit of a firmness, maybe set in a little bit of a bottom.
Stay with Bloomberg Radio through the day. Important conversation to frame where we are.
And with 2 minutes left, Rovers are taking off Simpson and bringing on their new 58-year-old striker, new owner, and recent Euro Millions winner, Gavin Mason.
Tonight's Euro Millions jackpot is a massive £35 million. That's dream come true money. Euro Millions from the National Lottery. Your numbers make amazing happen. Estimated jackpot. Rules and procedures apply. Players must be 16 or over.
This one shouldn't take long. Of course, if it had a cover, I might not be bothered. Can't see what's under there. And then they'd have chained the back wheel. It would have taken me much longer, especially if the chain's off the ground. Makes it harder to cut. This one doesn't even have a lock on the front. So, in the time I've been talking to you, I've nicked it.
On average, in London, a scooter or motorbike is stolen every hour. Make sure it's not yours. Lock your bike, chain the rear wheel, and cover to make it harder to steal. Lock, chain, cover. The Met Police.
We've all been in one, but how much do you really know about black cabs? For instance, did you know that a black cab has to be tall enough to accommodate an individual wearing a bowler hat? That's a lot of space for you and your briefcase. Or that Free Now drivers can use the bus lanes, the perfect getaway to make your meeting in time. And with 2-minute central London pickups, you needn't waste time searching for a taxi. Just download the Free Now app today and take the hassle out of getting round London.
Welcome to Costa, the nation's favourite coffee shop. What can I get you?
A flat white, please.
And would you like to
enter the 10 million point Costa Coffee Club giveaway?
Yeah.
And collect points towards free coffees and treats in store.
Thank you.
You're welcome.
Registered Coffee Club members only. 18 plus, GB only. Excludes Northern Ireland. Purchase required. 9th of March to 5th of April. The question, what is your favourite branded coffee shop, was asked. See costa.co.uk for full details and T's and C's.
Mayday, Mayday, this is Red Dwarf. Our engines are dead and we're being sucked into a black hole. Can anyone hear me? Over?
The only thing that's over is us, Crichton. We're finished.
Guys, relax. I've got Smart Breakdown with the AA. It sends them your vehicle's fault data, so they should know what's wrong before they even get here.
I don't believe it.
What, that they'll already know what's wrong?
No, that you're actually capable of something useful.
The future of breakdown, today. The AA. Drive smart. See theaa.com for details. This ad is made from 100% recycled commercials. Just like Smart Water's
all new
bottles are made from
100% recycled
plastic.
What's that number again?
100%. Every Smart Water bottle is made using recycled plastic, and because it's still
100%
recyclable, the plastic will be used again
and again.
Smart Water, now in a 100% recycled plastic bottle. Label and cap 100% recyclable, but not made from recycled plastic. Yet. We're working on it.
At Asda, with our great range of beers and cider, it looks like you're hosting. Get 2 packs for just £18 or just £10 each. Like 12 bottles of Corona or 10 cans of Copperberg Cherry. Cracking brands, refreshing prices. Don't compromise. Asda. Save money. Live better. Selected stores subject to availability. Offer ends 18th of March. 330 millilitres each. Drink aware.
Peoples of London. Are you like Sergei, working your balls off from 9 to 5, then cooking for whole family? Well, I, Alexander, have taken responsibility for tonight's splendid evening meal.
Ooh, let me guess. Meerkat meals?
Of course. You know how I roll. Get 2 for 1 on food with Meerkat meals at your local favorites. Like the Crooked Well, when you buy through Compare the Market. Qualifying purchase, app only, 2 for 1 on selected food, participating restaurants, a la carte only, Sunday to Thursday, T's and C's and exclusions apply.
Middle of the world, 24 hours a day at Bloomberg.com, on the Bloomberg Business app, and on Quick Take by Bloomberg. This is Bloomberg Radio. This is Bloomberg Markets with Lisa Abramowitz and Paul Sweeney.
Is there any bank right now in the U.S. that you think is a buy?
Do you think Chairman Powell has lost the market?
Jeff Bezos is no dope. What's the big ka-ching?
The big question, I think, for investors is free cash flow.
Breaking market news and insight from Bloomberg experts.
The U.S. tariffs actually hurt both China and the U.S.
Large strategics are looking to either buy or invest in innovation.
Soybeans and corn have been basically at or below the cost of production for about 4 or 5 years.
What we see more bonds, more yield.
This is Bloomberg Markets with Lisa Abramowitz and Paul Sweeney on Bloomberg Radio.
Good Tuesday morning from New York City to our worldwide audience. We have risk back on today, clawing back a little bit of the losses that were sustained across financial markets yesterday. We'll bring you the latest, of course, throughout the morning. We're going to take a look at the bond market and the yield curve. What is going on there? We'll talk to our resident expert, Ira Jersey from Bloomberg Intelligence. And then we're going to take a look at Italy, the lockdown expanding to the entire country. We'll get the latest on that. But first, let's go to Greg Jarrett of Bloomberg News for a Bloomberg Business Flash. Greg, what do you have?
Paul, stocks have been making an effort to
to come back. At one point, they were 50% of the way there. Now we're off those earlier highs. The positive attitude comes with speculation the Trump administration and other governments will deliver stimulus to fight the effects of the spreading coronavirus. Haven assets from the yen to treasuries are slumping. James Bevan, CCLA, tells Bloomberg that in the midst of all this volatility, he's been seeing opportunity.
Oh, absolutely. I think that good quality equities, by which I mean companies that are able to determine the price they can charge in the market and at the same time are able to control their costs, look profoundly well placed. And into that mix, I would put a number of the big IT names, the Alphabets and the Amazons. On weakness, I think those are definitely buys.
Saudi Arabia escalated its oil price war with Russia as its state-owned company pledged to supply a record 12.3 million barrels a day next month. We check the markets every 15 minutes throughout the trading day on Bloomberg Radio. The S&P 500 is currently up 2.9%, up 78. The Dow's up nearly 3%, up 708. And the NASDAQ is up nearly 3%, up 235. The 10-year is currently down 0.9% with a yield of 0.6381%. West Texas Intermediate crude is up 2.5% at $33.65 a barrel. COMEX gold is down 1.3% at $16.5440 an ounce. The dollar yen 104.48. The euro's $1.1371 and the British pound $1.3029. That is a Bloomberg Business Flash. Now Bloomberg Markets is underway with Lisa and Paul.
Thank you so much, Greg, Jarrett. And as Greg was talking about, we're seeing a bit of a comeback today, although way off the earlier highs. And this follows reports that we are not going to get a concrete plan necessarily out of Washington, D.C., and how the White House plans to address some of the disruptions caused by coronavirus. Dave Wilson, Bloomberg Stocks editor, here with us in our Interactive Broker studios. It's interesting to see that you're seeing also a retracement of some of the earlier weakness that we saw in treasuries, bounce in yields. That's come off as well. What are you seeing in terms of what's swaying markets this morning?
I suppose as much as anything, it's just, you had such an extreme decline yesterday. You've gotten a bounce back off of that. And now the market has to try and find its level. I mean, one example that sort of jumps out at me is Halliburton from today's trading, one of the biggest oil services companies. And the reason I bring this up, this stock was up about 17.5% initially, gave back the entire gain, and now it's higher by a little bit more than 2%. I mean, if you just looked at where it is now, you'd say no big deal. But it shows you the kind of volatility that's still there, even as the market kind of settles out here. So it's like people are trying to figure out what happens next. Royal Caribbean, another example like that. I mean, they withdrew their forecast for this year. No surprise. We're seeing travel companies increasingly do that in light of the coronavirus and how it's kept people from taking trips. But that was a stock that was up as much as 6% early on. It's now lower. So, as much as things are kind of reversing to some extent from yesterday, practically every stock in the S&P 500 is higher, only 11 down at the moment. There's still this, trying to find a level, I guess you could say.
President Trump is out this morning tweeting about the Federal Reserve, and I'll quote this: "Our pathetic, slow-moving Federal Reserve, headed by Jay Powell, who raised rates too fast and lowered too late, should get our Fed rate down to the levels of our competitor nations. They now have as much as 2-point advantage with even bigger currency help. Also, stimulate!" exclamation point.
This is amazing to me because President Trump has been jawboning the Fed for a long time, saying the Fed should lower rates. The Fed cut rates by 50 basis points. It did nothing. In fact, the sell-off that we saw just escalated, which raises a question: what more can the Fed do? Currently, the market is pricing in that they're basically going to drop to zero, and that it's not going to make any difference at all if you look at longer-term inflation expectations. But it really points the finger at Washington. What are they going to do?
Yeah. Hey, good question. I mean,
Dave Wilson, what are they going to do in Washington, D.C.?
I mean, ask somebody who's in Washington. Let's start there. But beyond that, this is the challenge: is how do you get out from under at a time when we've seen a central bank move and market just sort of said, and you saw the volatility persist. So that's a hard one because it's not like you can cut your way out of an outbreak of a virus. I mean, and that's really as much as anything what's going on here. You can't cut your way out of lower oil prices, which you have now thanks to the Russians and the Saudis. So, you know, there are just a lot of moving parts, and you can't assume the Federal Reserve is going to fix everything. I mean, that's why, you know, people are waiting for the fiscal answer. Right. And at this point, we don't have it yet.
Yeah, interesting. Looking at the banks, Dave, remember the banks have been so hard hit, and they hit some 52-week lows yesterday. Looking at J.P. Morgan and some of the peers up about 4 or 5% today. So, again, a little bit of a bounce off of yesterday, but still the problems are right there.
No, they are. And let me tell you, here's the number from yesterday that jumps out for me because it's highlighted in my chart of the day. That if you
should have a sound effect.
Yes.
If you look at the ratio between the KBW Bank Index, which is 24 of the biggest U.S. banks, and the S&P 500, yesterday it fell below the record low from March 2009, right before this bull market started. So it just goes to show you how extreme things have become. I mean, you've got to ask yourself, are banks in the same position now that they were in the aftermath of the financial crisis? Because that's where you were in March 2009. You know, that's a real question. And it's one that's arguably, when you look at this indicator, you'd say the answer is yes. Now, whether that's really true when you take a step back and look at the industry is another matter. But at the very least, it shows you how extreme things have gotten here.
Which is such an interesting segue into the story that I find one of the most interesting of the day, which is on the Bloomberg, that Germany is weighing bank capital relief to counter the damage wrought by the coronavirus slowdown. I'm looking at this. It makes sense. So basically the idea is in the aftermath of the financial crisis, banks had to hold a lot more capital, cash-like instruments, safe assets against riskier ones in order to buffer against losses in a decline. Now, basically, the government is saying, or they're thinking about, regulators are thinking about saying to banks, you don't have to hold that much if you're going to take that money and actually lend it to companies to keep them going. But it raises a question if this is coming at a time of weakness, heading into what could be, or perhaps some people would say already is in Europe, a recession. What does this do to the financial system?
Yeah, and isn't that the whole point of having these kinds of capital buffers in the first place? To try and get you through periods like this? Yeah, I mean, clearly there's a public policy goal that would be served by easing things up on the banks so they can help out the companies that are hurting. I mean, okay, that makes sense. There's an economic argument for it. But then the flip side of the coin is what if it doesn't work? What if it works as well as negative interest rates have in Europe over the past 6 years?
Okay, and this sort of brings us to a question that I did want to get to you, because it's hard to sort of measure the moment-to-moment swings. We're seeing the rally actually gain steam right now with the NASDAQ up 3.4% today. But technically, are things working in an orderly fashion?
Well, it sure seems like it. I mean, you haven't heard reports of trading systems breaking down, not being available for the most part. It looks like, things are kind of progressing day to day as they normally do. It's just you're talking about a lot bigger numbers, whether it comes to the amount of trading or the price change that you're seeing in securities. That's what's different.
Yeah. Dave Wilson, Bloomberg Stocks editor, joining us here in our Interactive Broker studios with a tie today that is perfect. It's money. It's money. I mean, it literally is money. It's literally, what, $100 bills? $50 bills?
It's an assortment.
Right now, let's head to our 99.1 studios in Washington, D.C. Nathan Hager. Nathan.
Lisa, the Vatican is closing St. Peter's Square to tourists till April 3rd. That is just one of the latest moves as the world continues to formulate its response to the coronavirus. Italy as a whole is already the first country to impose a nationwide lockdown. Spain is planning to play soccer games to empty stadiums for the next 2 weeks. And President Trump plans to detail his response later today.
We're seeing the Senate. We're going to be meeting with House Republicans, Mitch McConnell, everybody, and discussing a possible payroll tax cut or relief, substantial relief, very substantial relief. That's a big number.
Sources say the relief will also include a short-term paid sick leave expansion, but not aid to the travel industry, at least not yet. They say the administration has been working on proposals for the last 10 days, but did not expect the president to announce that the details would be coming as quickly as tonight. Joe Biden is trying not to project too much confidence before today's Democratic primaries.
I don't expect anything. I just hope I've been able to earn the votes, and I don't take anything. I'm not a pundit.
That was Biden last night in Detroit. Michigan is the biggest prize of the 6 states voting today. Polls there show him 23 points ahead of Bernie Sanders. Russian President Vladimir Putin is setting the stage to stay in power another 16 years. Bloomberg's Amy Morris reports.
Putin said in a speech to the lower house of parliament that Russia's constitutional court should decide whether lawmakers can scrap term limits, which would prevent him from holding office beyond 2024. The court ruling is all but certain to go the Kremlin's way, allowing for the 67-year-old Putin to serve up to 2 more 6-year terms. In Washington, I'm Amy Morris, Bloomberg Radio.
Global news 24 hours a day on air and on Quick Take by Bloomberg, powered by more than 2,700 journalists and analysts in more than 120 countries.
2 people who are as fascinated by the markets as you are.
What's your sense of the competitive landscape in the cloud business?
Lisa Abramowitz.
People were talking about potential regulatory pressure.
And Paul Sweeney.
Are you seeing flows into ESG ETFs?
Bloomberg Markets.
What's your main conversation today with some of these corporate executives?
Weekday mornings at 10 Eastern.
They're spending a lot of money there.
On Bloomberg Radio, the Bloomberg Business app, and BloombergRadio.com. Bloomberg, the world is listening.
Melissa from Michigan. I work an extra part-time job serving lunch at my child's school, but I still can't afford to put food on our table.
Daniel from California. Choosing whether to pay the rent or pay to fix the car to get to work doesn't leave us with much at all. Now we can't even pay for meals.
Hunger is a story we can end. End it at feedingamerica.org. Brought to you by Feeding America and the Ad Council.
Are you interested in a challenging and exciting career? One where you can be part of solving complex challenges across industries and geographies? Bloomberg's ever-expanding technology, data, news, and media services foster innovation, empower clients, and offer nearly limitless opportunities for career growth. Visit Bloomberg.com/careers today to view our current job opportunities. Bloomberg LP is an equal opportunity employer. The address once again is Bloomberg.com/careers.
My mother was always very active and independent, and she was familiar with her neighborhood. But one day, she stopped at the stop sign for much longer than usual. She wasn't even really sure where she was at.
It's important for you to talk to someone about it. I felt so much better after my son told me, Mom, we'll figure it out.
When something feels different, it could be Alzheimer's. Now is the time to talk. Visit alz.org/ourstories to learn more. A message from the Alzheimer's Association and the...
At Asda, with our great range of beers and cider, it looks like you're hosting. Get 2 packs for just £18 or just £10 each. Like 12 bottles of Corona or 10 cans of Copperberg Cherry. Cracking brands, refreshing prices. Don't compromise. Asda. Save money. Live better. Selected stores subject to availability. Offer ends 18th of March. 330 millilitres each. Drink aware.
Harry Bikers here. This message goes out to something very special.
Yes, we're talking to you, chicken.
Maybe we've been seeing too much of each other.
But times have changed, Dave.
We've been cheating on meat.
Thing is, no stocks make veggie dishes so irresistible that cheating on meat is proper tasty.
Our dear chicken, you were the fire in my life. But it's all about you now, aubergine katsu curry. Prepare to be wined and dined, my love.
Cheat on meat with no veggie stocks.
Take the next left, take a right, and you've arrived at your Vauxhall retailer, where you'll find the all-new Vauxhall Corsa. Test drive now and you can take advantage of a £500 deposit contribution with 4.9% APR representative. Book your test drive of the